horizon, the charts are bold. Dated bands rapping stories untold. Flying with rockets through their AI. Up we go, reaching for the sky. Every trade hold never dies. On the edge as the numbers fly. Checking the charts, midnight glory. Heartbeat thumping, another story. Green and red, flashing voices loud. Future kings standing on their cloud. Flying with rockets through the AI. Up we go, reaching for the sky. Every trade hold never dies. On the edge as the numbers fly. Treading on, the pulse ascending, mind on fire, never ending. Trees of gold, endless fight. Push on through the endless night. Riding with rocket scooter AI. Up we go, reaching for the sky. Every train home never dies. On the edge as the numbers fly. Checking the charts, midnight glory. Heartbeat thumping, another story. Green and red, flashing voices loud. Future kings standing on their cloud. Checking the charts with their AI. Up we go, reaching for the sky. Every train home never dies. On the edge as the numbers fly. Checking the charts, checking the charts. Midnight glory. Sanctuary in awe, it's blending. Mind on fire, never ending. Dreams of gold, endless fight. Push on through the endless night. Push on through the endless night. Push on through the endless night.
Good morning, friends. Welcome to the stream. Good morning, guys. First time I'm staring at the market. I didn't do anything last night. And boy, oh boy, it's looking crazy. Looks like we had a big overnight dip and rallied all the way back up. Wow. Hopefully you guys survived that. That looks pretty dangerous. Good morning, Simon Dean. It flies, it dies. Fraser, Trevor, Jaded. Ready to go this morning, baby. Let's go. Let's go. Welcome to the stream, guys. Don't get to smash the like button on the way in. Let's do this. Good morning, Gold Tilt, Urahara. Hero, Ryan Lee, Andrew, Ian. Good morning. Good morning, friends. Ghost. What's do I press to make money? All of them. IE Trader, DeJury, Jognate, Futures, Trader, 1434. Rocket Scooter launch button. Launching in 3, 2, 1. Let's go. Tyler, what's up? Jamie, what's up? Slazin. Good morning, and rest of the friends. Roll call is so hard with these names because there's no spaces and it requires me to read each one of them slowly. I used to remember going through roll call and just like reading. When you smash a bunch of words together without spaces in them, it makes you slow down when you read them. Smashy smash that, likey like. These pre-market wicks are pretty crazy. It's looking like it. Maybe get everything ready to go here. All right, guys, friends, we are ready to go. All right, this dip looks like we fell 68, 63.58 was overnight hedge. We're pretty close. Still supporting that. I had a dream about the stock market. The stock market did this. We dipped and came right back to open, and I'd wake up confused as to what I want to do. So now I dream about trading, which is kind of nice. Uh, 107 being, hold on, 23024. That's right, written in the wrong spot. Hold on, 6332. Make sure this isn't the right spot. No, this is the wrong spot. Never mind. 32. Whenever I refresh my platform, it looks like it cached previous day's data. Okay, that is it. So we didn't break that. This is yesterday's. So today's is going to be 23024. So these are close to DD band low. Good morning, all my friends here. AI video of me in the song submission channel. Oh boy, we're gonna start off strong today. I'm always scared when you guys say that. Let's check it out. Oh god. Every time I look, there's a whole bunch of stuff. This is great. Man, you guys are making it so fun. First of all, we've got a couple of submissions. We have Endless Summer Mat, which is kind of nice. That Maddie Slater Mat. This one right here. What the hell? Two things. What am I dancing on? And why am I 3 feet tall? Slightly Hobbits' mat. This is great. Like the, you know, if I was like as tall as that lamp. Hold on. See if that's. There we go. So, is this a treadmill? Like, what do we got going on here? I'm curious. That's incredible. That's great. Time to ride. Now we got like literally like AI tattooed up hunk mat on his Vespa. This is great. I tweeted this morning. That's hilarious, Mike. These are relevant photos. We must use them. You always start to show off with a bang, man. That's hilarious. That's great. That's really great. Oh god. Oh shit. Well, Sandy. Come on, Sandy, baby. Oh, that's great. Y'all are so funny. Great way to start out the day. All right, announcements. I only have no afternoon stream today, by the way, of my last and final dentist appointment right after noon. So I'm gonna have to leave my funded early as well. So you guys will be in good hands. It's Friday. I'll take the day off, go have some fun later. After lunch, I'll be bailing out here pretty quick, or after lunch money, I'll be getting out here pretty quick. Well, market's going to be unusually sensitive to news. Let's talk about that, right? Jackson Hole stuff going on. We have obviously, I would say that I would rank it on a scale of 1 to 10 of importance, probably a 3. And if VIX was below here, I'd rank it a 1. In other environments, I'd rank it a 10. It's weird how Powell's Jackson Hole comments, when people are like confused, like what's going on, like what's Powell gonna do, or what's the Fed gonna do, Jackson Hole, people like really listen to what things are gonna, you know, what's gonna transpire. And if there's any hint that something's gonna change, people freak out. There was a time when Jackson Hole was a huge event at times, and I would say like way back in 3 years ago, we would hear a lot of the Jackson Hole commentary and then really sort of like, okay, you know, something's going on. When back in here, I remember it was something that you had to kind of make sure you listen to. Over here, I think it's so predictable what the Fed's going to do. There's nothing that can be said. The Wall Street has already priced in. That's my feeling. That's why I say it's like a 3. A 3 instead of a 1, being that the VIX is here and market can still freak out over anything. Pretty simple. But back when we started kicking on QT back at the end of 21, you know, Jackson Hole, people were like, you know, in here especially, very sensitive to that. Here, I'd say, you know, what are they going to say? The same shit. Inflation's passing on to customers. We're probably not going to cut rates next year. And if they say that, you know, anything along the lines of we're probably not going to cut rates next year, I think Wall Street's still optimistic we might get a couple. But we're seeing the trend. More and more Fed members are leaning towards no cuts because of the 5% inflation we're going to have. So I think that if there's any mention, which there usually is not, but if there's any mention of next year, this year's solidified. We all know we're going to get 1 rate cut this year if we're lucky, and it's going to be next month, right? It's pretty much what they've been saying. And Wall Street's been pricing that in, and now we've been kind of pricing it out because the tariffs are starting to realize in the PPI, and now the CPI is going to pick that up later this year. People are starting to bet on the fact that we're not getting any more rate cuts, and the market's getting a little turbulent because of that. I don't think it's going to crush the bull market for good, but this obviously is a sign of something like that. And with VIX above, you know, triple B, kind of like the what's it called? Oh, I'm sorry, you guys can't even. I got a little line cutting this off. VIX is still above its contango midpoint, so we're in that area where market's sensitive. VVIX is likely going to be 100 if we're not moving anywhere. So we'll be sensitive to anything. And if something is said about next year, even though it's kind of like the smart people in the room are expecting no change for next year, like no extra rate cuts, I think the market can still flip out on it. I'm sure I'm ranking it a 3 out of 10. Important, yes. Revealing, possibly not, because, you know, usually they don't try to reveal a lot. It's usually kind of dodgy. Like, oh, we're watching the data. We're watching the data. We'll see. We're watching the data. And usually it's not like there's a big reveal. As much as we all watch it and we're like, I wonder if Powell's going to drop any hints. You know, he's very calculated when it comes to what he says. And when it comes to Jackson Hole, it has been, you know, monitored as a trader by us. You know, I can count a lot more times that it actually has had no effect, and has had some effect on the actual outcome of the trading day. But yeah, great question, because that is something that's important today. Get my windows together here. I know. What do you guys think? A little discussion going on here. Don't think we're gonna have anything spectacular. Powell talks, which is what now? He's speaking early in the morning. He should be talking like right at market open, right? You can't see it. Oh, my bad. Yeah, I'm not watching chat. Financial juice. Some of the Fed members saying that the rate cuts don't seem plausible. Yeah, so the dot plot even said that, right? So which some of them? Remember, December rate dot plot, March dot plot, and we had the June dot plot and the December. I think in March there was like 4 people Let me take a remember. September. There's like 4 people that believe we didn't need a rate cut at all. And the last stop plot we got there was 7 of the Fed committee. It's about a third of the committee. So depending on who you talk to, you know, if you're talking to one of these 7, they're going to say, yeah, rate cuts are for losers. No rate cuts. Talk to anyone else, they're like, yeah, we're still going to watch the data and probably going to have a couple. And depending on who they talk to, right, is you're correct. Some of the Fed members saying rate cuts don't seem plausible, and more people are jumping to the boat of it's probably not plausible anymore. There's still the majority of people still think, again, we're still holding on. I would say we're still holding on. I'm gonna bet that this time around there's more people that are on the fence and we don't need it anymore, because the people that were still around were betting on or looking at the data, and the data was implying that they weren't passing the inflation through, you know, producers weren't sending it through. And then recent data is starting to show that they are. The PPI change was immediate change. The market started selling off. You guys understand the chain reaction. This was PPI. PPI has turned the market around. If you're a smart person, smart enough to see that, you can tie the chain together. PPI just shot up when the whole time it was kind of like sort of just chilling when Michigan was saying it should be up here and PPI was here. And then Powell was like, well, we're not seeing the pass through we thought we were going to see. And that's pretty cool. And then Wall Street was like rallying. And all of a sudden PPI comes in and it's like this. And they're like, well, next time we hear Powell talking, it's going to be a different narrative. Oh shit. They are passing the cost through. It's only a matter of time through inventories get depleted and reordered. And now CPI goes up. And the Michigan numbers were saying if the tariffs stayed there, we're going to have 5% inflation. And 5% inflation, we shouldn't be getting any rate cuts at all. So the fact that the dot plot and like last round show that people still were thinking rate cuts were cool, it's because clearly they were betting on us getting closer to 2% rather than 5%. Now 5%'s pretty much on the table. I'd be in the boat of, if I were a Fed committee member, I would be voting on no rate cuts. Like if you were asking me, hello, Matt, the gentleman from Texas, how do you vote today? I would vote nay. Nay, my friends. Rate cut is too severe. We have CPI going to go up. I vote nay. The gentleman from Texas has spoken. And then I would say no, because it's not needed. Now, does that mean the market's going to be bearish? I don't think so. Because of a rate cut here or there, I don't think it's a quarter of a point. At 4.5% is enough to really tilt the market on its base. But it really is enough to change a little bit of the sentiment that inflation is going to be high and there's a general economic slowdown because of it. The downside was triggered by the whole PPI sort of reveal. And I think that this is going to continue to trade lower because of that. Until we find a happy medium, and the market's going to trade lower to some point and then get back to rallying, wherever that ends up stopping. It started off by seeing rotation and then started off by all things selling off. For the last 10 days, we've been seeing rotation. You can open up your sector tracker and you'll see half the things are up, half the things are down. Most days. It means people are like still holding on to the idea of a bull market, but they're being picky about what they're throwing their money into. So getting out of certain things that are going to be affected by the tariffs, maybe jump into other things. If it was a general bearish sentiment across the board, you would see everything dumping at once. You wouldn't see positive S&P resilience and negative Nasdaq resilience, right? Anywho, these are my thoughts. These are my thoughts, guys. Subscribed and in. What's up? What's up, Professor? Good to see you, man. Gonna start joining you more. Never catch these because of work. Oh, man, I'm glad to have you. Glad to have you here. Hey, Matt, how are you today? See? Adi, love you, man, because everyone asked, where's Matt? But nobody asked, how's Matt? Feels good. You guys love me. I love it. Thank you. Matt is doing great today. I'm having a good day. Although I got to go to the dentist again today. I hate the fucking dentist. One more time. I had to chop the whole procedure up in a bunch. I'm going to pick my car up today again, too. So, what a way to start the weekend. You'd vote for Matt to give you $10. The gentleman from Texas has spoken. $10 for all members of the community. If I were to give you a $10 bill, you probably would say, hey, Matt, can I have a $10 bill? Can I have $10? I just gave you $10. Can I have $10? Chimichangas. Fellow Canadian. You vote nay from Canada. The gentleman from Canada has spoken. We call upon the noble Simon from Canada. Sir, how do you plead? We vote nay. Oh, bully. And everybody's like mumbling in Parliament, just like sort of like the 1700s Parliament, where everybody's like, just like in the movies. They disagree. Everybody's like mumbling. Sounds like they're saying watermelon. Get all the gold teeth with one of them. Some of them will have diamonds in them when I'm done. We'll be coming back. The people's chump. Get my girl there. Last Thursday. It was dentist last week. I have dentist, like a bunch of dental work I'm doing, so it's like I have to break it up in the chunks because I can't just take like a whole day off, and I had to do it in pieces. Is Spedia's prop firm worth your money? I talked to them to get a handle of what their products were like. And when I did it, when I ran it through, like we have a model that we rank our prop firms on to find out which ones are the best, and we try to work with the best ones. Spedia's is good, but it doesn't really beat any of our current partners in any of the categories. So you'll find that, you know, with the offerings they have, they're really good. I'd rank them like it's good, but you're gonna get a better deal with FundedNext or better deal with my funded for some, you know, certain of the account types they have are good. They have like an investing, like a long-term one, swing trading one. That was pretty cool. But I would say in general, if you like the firm, they seemed good. I don't have a code for them yet or anything, but they did seem good. I was like, you know, interviewing a bunch of different prop firms to see which one's going to replace Apex as far as like our stronger partner. They have a static and a fundamental and a swing. The fundamental account was more like a end of the day drawdown, very similar to like a Tradeify growth, except there's no DLL. This is the kind of the good part about that. There's no DLL. There is consistency, right? So for no DLL and no consistency, this is where you want to go with my funded futures. They immediately win on that category. Other than that, they're good. My one hesitation is that they were Rhythmic only. And so while it is compatible with some platforms, Rhythmic's not compatible with a lot of things, including TradingView. So you might have limited platform access because of the Rhythmic thing. Patrick just got a 12 million deal with my funded futures. He absolutely did not get any deal with my funded futures. He is just fucking with you guys. Y'all, it's so funny. He said the other time he got $1 million deal. He's literally just trolling y'all. I didn't get anything. He's just having fun. You gotta imagine how many people at my funded futures phones are blowing up last night. Like, what's this deal about? No, Pat's hilarious. He just trolls to be funny. It's funny. When I saw it, I was laughing because I bet he's just trying to make like Matt Leach roll his eyes to be funny. I'm gonna get a deal to do that. He just likes to make everybody turn their heads, and because it's, you know, it's well, according to the joke is that some of these prop firm people are cheap, and so him saying that it's just poking fun at Matt just to be funny, just and good humor, right? Just to be funny. Matt's a cool dude. If you ever met him, he's pretty chill. He's a really smart dude. Yeah. It's I saw it. I was laughing at that. It was really funny. Even if they work out a deal or whatever they would work out, which he's already like me in my funded circle. He's one of their you know, tier 1 affiliate, whatever. You know, he gets like good deals, and you know, he'll get like flash sales and stuff. This is reserved for just like a handful of people. So he's certainly in the circle, but yeah. Y'all know Powell long enough. He just says funny. He just says stuff to make everybody ask questions, and then when you ask him about it, you know, he'll just say funny stuff. You said Pat's a good trader, but he can't. You said he's a good trader, but he can't really teach. He's a good. Honestly, I've been watching, or I've known him for a decade, and I've watched him get better. It's kind of like I don't really say much about a lot of people, because I don't get a chance to kind of watch them trade. But a long time ago, he's so different now than he used to be. He's gotten a lot better at trading. It's cool to see it. It's cool to see somebody find their stride and catch their groove, and like the last couple of years, it's like his skills were improving, but the last couple of years it's like he's doing very well for himself trading. He's got on some leaderboards and stuff. I was actually impressed. For longest time I just thought, I didn't know if he had I didn't know anything about other than what I saw on YouTube. So when all the leaderboards and stuff were there and he started hitting a couple of them, I was like, okay. And that I catch a stream every now and then. The strategy is very, very, it's a momentum based thing. It's just like ICT style, where it's a momentum based. You're looking for liquidity and breakouts and stuff. And in reality, it's more of a coin flip sort of strategy, but with good position and risk management, you can do very well with momentum based. Just as long as you avoid getting chopped up too much. You commit to a direction and you go. I think what I saw was different was he would commit to a direction instead of flip flop. In reality, that's how you survive with a trading strategy like that. Is when the market is chopping and you don't get the momentum, you get like a bunch of false breaks. If you go long, then go short, then go long, you'll blow up quick. And so to survive that kind of stuff, you just got to be able to commit to one side and fight at it. And I teach the same thing, but maybe I'll get a $14 million deal from my funded. I'll renegotiate the cost for lunch money with Matt. I'll be the most expensive 1 hour segment on the planet. Just kidding. What's up? Good morning. Bulls hit the longer. Yeah, the lower low down here. 23.025. So my funded futures is going to have a get together somewhere. Let me see where it is. One of them is texting me about it. It's probably gonna be Dallas, somewhere in Texas. So when my funded futures has a meetup, like all the big folks from the show, I'll be there. It's probably gonna be in Texas, and it's probably gonna be in a couple months. So if you guys clear your calendars for it, we'll be having a big old meetup. Which setup is my 90% of everything aligns? Yeah, let me get the thing for you. It's gonna be monthly hedge pressure, bear zone, bull zone, DD bands. Each one of those when everything aligns. So we call them our strong pivots. And if you see on any of the other handouts, you'll see that the strong pivots are referenced. They're the ones that under ideal conditions work most of the time. All right, so I made no trades overnight, by the way. I didn't do anything. So we went out to a Michelin restaurant last night for the first time. There's a place in Houston that got Michelin star. It was, we walked in, there was 5 tables. It was a tiny little room, and there was a little counter, a little bar. They didn't serve alcohol or anything. And you could see the kitchen right in front of you. And it was Mexican inspired, fancy food. And there were 7 or 8 dishes, and it was all about a celebration of corn. There's a million different ways they were cooking with corn. It was really good. And it was one of those things where you get a bunch of little small bites, and each bite has 50 things in it. It's pretty good. So our thing last night was we're going to put our phones away and not do anything. And when I got home, the market had just been flat. So I assumed we were going to, from yesterday, hold this this area in the S&P where that monthly map was, 6384, right? Which is where I said if we hold this, the market would open in liquidity pocket on monthly maps. And so when I saw it hold all overnight, I was like, okay, this is good. And then I woke up this morning and saw that, and I go, ugh, we dipped into bear territory and back up. So 6384 is that key pivot. This is equivalent to SPY 635, I think is what it was. That's where the S&P loses bear zone on monthly map. So the idea is that we have this low consolidation inside of here. Be careful that today doesn't sell off. as Europe and Asia have tested these areas. This is that key support. Now, when we get a new monthly map today, we'll read it, right? See if there's anything better. But I don't like the fact that it breached through it today. I don't like it. It's a lot of giveaway accounts. Heck yeah. Heck yeah. What kind of data I think we'll have today? I'm going to be honest with you guys. I think that it's going to be internal to this range. I would be very, again, I'll have to see the read. I don't like guessing. I'm going to read it when it comes out. But the way that it looks, the fact that we're pushing through these lower lows, it has me a little worried that today doesn't follow this trajectory lower. Yeah. It kind of like feels like it. And the idea that Europe just kind of like tanked out like this doesn't spell out reversal to me. These 3 lower low days like this spell out inside day, and just 1, 2, 3. Even if it's a recovery day, which it could be, normally when you see like the market like pressing lower, lower, lower like this, it usually continues like to push lower. Can I remind you guys what it looked like? Yeah, something like this, right? Like, you know, it's fighting inside of here. Just be careful that it doesn't die by the end of the day. I don't usually trust bottoms that take 3 bounces or more. Like, I feel like that's not consolidation. That's like selling that just has a little liquidity. Now again, you know, on the way up, on the way down. And again, who cares what that means? Because, you know, chart reading is just chart reading. Chart reading is kind of dumb anyways. But in general, when I see the market press lower lows and lower lows, I never tell myself reversal. Even if there's a big green day, it's still, I think it's coming down. The way the market's planning out, there's enough volatility there. Any upside inside of here, immediately met with downside the next day. So what I'm actually doing right now is I got money ready to go in my options account, such that if we do get a big green excursion day by the end of the day today, I'll be doing the same thing, grabbing puts for the month out. Just to hedge again. Same thing as I did last time. Same thing that I did here, right? I'm going to do the same thing on the first big green up day we get and grab some puts the moment the market closes, like a minute after it closes or a minute before it closes, just to get ready for the month. Boom, 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 boom. What's the opinion of the coming season? I'm going to say that I think that we're kind of entering some possible bear territory. Today might be an update. It could be. We'll see what the read is in the morning, but I think that after all of this is said and done, it's going to be the overall trend is still down to a little bit. What's my favorite cuisine? Indian food, actually. I'm a huge fan of like Indian food or Asian food that's like very complex and spicy stuff. So Italian is good though. Like, I mean, when I was a kid, I liked Italian food. Pretty basic for like Texas. There's like a million Italian places wherever I grew up. Nothing good on the charts. I'll say no. The upper and lower consider premium discount. I would say inside of here, yeah. I would, again, when the market opens, like right when we open, I'll let you guys know what I think we're gonna do. I have no desire from here to take a guess. We are consolidating above a key area. Remember, whenever this, you know, we need to read those monthly maps to see where we're going. I've made no trades today. All my accounts are neutral. Everything's 0. That's pretty exciting. To walk in with nothing on the table. We will be gapping up slightly, so we want to see if that resilience number stays positive in the first couple minutes. If this white line drops below 0, clearly we're filling the gap. Some people typically, like, we don't teach it because it's a B setup, but some people do short to fill the gap. Right now it's going to be 15, 20 points, give or take, where we open. So with negative res, it can beeline fill the gap. Yeah, I think you're right. You're hard that we get an end of the day move. Right, the end of the day is going to really solidify where people think the market's going. I think throughout the rest of the day, the market's going to play a range, and at the end of the day might be where it dies out or rallies. Would FundedNext ban you for account churning? I haven't heard anybody get banned for account churning yet. Like they flag you, I think, if you are obscenely like doing it as a strategy. But I haven't heard anything yet. What's my favorite Indian dish? Oh, dude. I mean, I like a lot of stuff. I like biryani and vindaloo and butter chicken, and I mean, pretty much like every time I go, there's this place called Agas, which is like Indian Pakistan kind of like blend. I always switch it up. I get something different every time. Biryani's the best. Yeah, biryani's so good. Butter chicken's good. Oh yeah, I'm reading what you guys are saying. Chicken lasagna. All right, I'll have to check it out. What is chicken lasagna? Never had it. That's good. Lasagna. Bum, bum, bum. Bum, bum. Looks pretty dang good. Japanese food, the best. I like Japanese food too. Am I Houston native? Yeah, man, I was born and raised in Houston. Are you guys from Houston? Anybody here from H-Town? Are there options expiring today? Yeah, so in the index products, SPY and QQQ have options that expire every day now. Am I taking ES or NASDAQ today? Usually it's whatever resilience looks better. Usually will dictate what I take. So chicken tikka masala. Yeah, there's a place called Red Lion Pub not far from me, which is a little British pub. It was actually on the Guy Fieri show, the Diners, Drive-Ins and Dive show. And they do like the best tiki masala I've had in Houston. It's so good. So you guys are in the area, check it out. They do all kind of stuff. They do like these like tandoori chicken quesadillas, and they do like fish and chips. It's pretty good. Lamb biryani. Yep, had lamb biryani. It's super good, super good. You're in Texas. Favorite food is Korean bulgogi. Korean's good, man. We're not far from like Long Point, which is like Koreatown over here. So we're in the Memorial area, so Long Point is just like a hop, skip northwest, and all the Korean restaurants are there. You're from Katy? Oh, hell yeah, hell yeah. Texas peeps. You're from Dallas? There we go. Hey, so when we do the My Funded Futures meetup, it's probably gonna be in Dallas, somewhere in Texas. You guys all come out and we'll chill. I'll be there, and all the My Funded Futures peeps will be there. All the peeps from the show should be coming out. Better res or better pivots? Well, yeah, probably both, right? For the opening. Agas is too greasy. I kind of like it, yeah, though. Personal preference though. But yeah, like I used to go to Himalaya. That's like my favorite, like straight up Indian place in town, Himalaya. It's probably a lot of people's favorite. Bel Air, River Oaks, Bissonnet Heights, Jets. What are you talking about? Oh, yeah, yeah. Not born in Houston, but ran there through your youth. Oh, tight. Yeah, that's cool. Yeah, that's all my stomping ground, man. Powell speaking today. Yeah, Powell's talking like right at the open, I think. The Jackson Hole. Let me see if I got a link to it. Where the heck is my... Powell's going to be... You guys have a Jackson Hole link, if you can drop it in chat. You send a pic? Okay. Any pics or anything, drop them in the song submission channel if it's like something for the AI stuff. You're from McDowell? Okay, cool, cool, cool. Ooh. Dom, I don't see any pic from you, man. Please turn on the subtitles. I thought I had it allowed. I don't know if I can do it while the stream is live though. Let me look. 5 minutes till market opens. Stream settings. Enable DVR, close captions. Oh, it's turned off. I can't enable it. Oh, shoot. Oh, so it's because of this. Look. This is why. I can't do closed captions because stream latency, I set it at ultra low so that you guys have the quickest response. So that's why it's turned off. Not bad. Sorry about that, man. Guys, do me a favor, smash the like button. We're getting ready to get started here. At 1,000 viewers today, so stay in stream, leave stream on. We'll be giving away a Tradeify straight to funded account. And exactly 11 a.m. we'll be giving away 4 ETF direct to funded 50K accounts. So 4 of you guys will become funded traders, maybe 5 if we hit our viewer target. Smashing that like button helps if you can get those likes up to 500. That'll get things going. Good morning. Good morning. Good morning. Cellar Door was the first place that accepted your fake ID. Oh, that's awesome, dude. Good stuff. Get some Austin, some Texas in here. Okay, cool, cool. Trump speaking today. Trump is an hour after Sugarland. Oh, nice. IDOC was from Sugarland. What affects is Jackson Hole on the market? Very little. But what it will likely reveal is that the Fed members are becoming increasingly more cautious about their stance on cutting rates. So if anything's revealed at all, usually Jackson Hole can reveal some big stuff if people are confused. I think the smart people in the room aren't confused. I think the average people in the room might be shocked to realize that the Fed is probably going to possibly cancel the rate cut this September if they see that the progression of interest rates or the progression of inflation removes the need for a rate cut. I think there might be hints of that. So right now, like I said, I don't think we're getting any rate cuts in 2026 now because the whole inflation thing. But I think the idea that everyone's still, believing that we're going to get rate cuts on September meeting is where Wall Street is sort of positioned. And you can see that maybe Jackson Hole, you guys watch this. This is where you're going to really get your info. As the days have progressed, this has just deteriorated, right? The idea is that when I told you guys PPI was completely turning the market around, it was going to be the reason we don't get rate cuts. I predicted that. I was very good. When back when this was 96% and this was 4, remember right after PPI, this dropped like to 85 and 15. And as the days have gone by, it's just been deteriorating. Look at the Fed watch, 70% chance we get a rate cut, 30% we don't. Wall Street is absolutely responding to PPI. This is CME Fed watch. Just type in Fed watch in a single in a Google search. So we predicted this, right? You, me, everybody here. We all did as a team. We knew that PPI was going to start a chain reaction to completely deteriorate the idea we'll have rate cuts. I even said rip rate cuts in 2026 on my Twitter. Like, I'm absolutely convinced there's no rate cuts next year. We'll be lucky if we get one this year, and that's it. And Wall Street is starting to completely abandon their bet that that's going to happen. So, anybody seeing a gap up long at the open? Well, right now the market's going to gap up. We'll see, right? Do we gap up and long, or do we gap up and fill the gap? That's kind of where we're sitting right now. So that is the big question. Gap is going to be pretty substantial. 20 points a move. I got no trades. Nothing. Doing nothing. Let me chill on this. All right, res is good. 80s and 90s. I think I'm going to chill on this and wait. Get our liquidity maps. I would say that we'll probably spend today inside of this range. I don't know if you or me, if you guys think the same thing, but I think that's where we'll be staying. I don't know about y'all. Nasdaq's looking a little more gnarly than the S&P is. Nasdaq completely dropped to fill the gap. Okay. So his maps come out. Make sure I just read this area here. With the Fed watch deteriorating, I think the market's going to be more downside rather than upside for the long haul. I know what you guys think, but that's what I think. Inside range day, possible selling day. You know, come on, give my liquidity maps, baby. All right, res is negative Nasdaq, positive S&P. We should be getting a divergence on the two. All right, here we go. Same as yesterday. Illiquidity pocket, not EST setup. Oops. So holding off on Nasdaq, no trade here on this. Bottom bull zone is a long entry point down here as well as hedge pressure. So the only place I have too long from would be right on here. On the gap fill with negative res, not a long setup here. To take, okay, let's watch S&P really quick. Range day, yeah, I think you guys nailed it. S&P does have liquidity pocket down here below. Let me delete this because I'm just going to be focusing on the majors. Right inside of here, positive res means we are supporting inside of here and supporting inside of here. So we have A plus down in here. I'd be willing to grab A plus dips on the long side. Perfect. Now the 1A trade is pretty decent. If I long for here, the breakout point goes to there. So the idea is if there is no upside limit to today's move on the S&P, as long as the S&P stays solid, that is the move today. Now the question is, will Nasdaq follow suit? Same as before. Nasdaq immediately rushed to fill the gap with negative res, and we're going to watch the two. So the idea is if I was an advantageous trader and I wanted to grab a long here, I would grab a long in the S&P for the big breakout. Nasdaq has long entry points right here at hedge pressure. That's it. 1B setup. So open, blue, open is the trade. This is the 1B on Nasdaq. So today an S&P is probably going to hold, but I think that maybe it's probably going to push higher. S&P is solid. PD ratio is solid. Open, blue, open. Now let's check monthly maps really quick. Just to double check. QQQ is the one that was gross. Is it still gross? Let's see if we get it. Let me watch trigger spine. Okay. Oops. Come on, it's caching the wrong data here. So, hey, QQQ has survived. That's good. So that's decent. So we have greater bull market across the board. Everything's greater bullish again. Looks like S&P's not refreshing. Oh, maybe. Try this one more time. I'm gonna grab that hedge pressure dip. Yeah, S&P is good. So monthly maps have all repaired themselves. All three greater market signals are bullish, right? So we're good. We'll grab some dips today. And this is inside day, so scalps only, right? VIX is still above triple B, VIX below 100, which is good. Okay. Good deal. Nasdaq pulling back a little bit. S&P rallying a little bit, right? Okay. We'll let Nasdaq hit that lower hedge switch and grab a long guy. Do me a favor, smash that like button, friends. Keep these numbers growing here. Let's get the likes up to 500. We'll do a giveaway if you guys get our likes up. So this is not enough with like 900,000 people. 1 out of 4 you guys are lazy or not lazy. Better for you guys are lazy. Smash it for me, please. Appreciate that. Nasdaq is an A setup from here to next resistance. That's a pretty solid setup. Best case scenario to there. Index divergence is red, so big rotation when index divergence is red. The question I have is, I'm doing this. All right, so if I were to take a guess here, I think we're gonna pull back off of Nasdaq resistance here. And I'd be willing to take these trades here. So yep, inside day with some downside first. This is not a good entry point for me to take anything on Nasdaq yet. This is 40. I think Nasdaq is probably going to pop and drop, but we'll see. So up in here, DD ratio is still bullish enough, but I do feel like that at least S&P is going to be pulling back, or holding it for Nasdaq's pulling back a little bit. S&P is looking solid, at least for now, for all of this to be support. So when Nasdaq pulls back, S&P probably just holds half gap inside of here. So dip and rally to finish out the day, I feel like might be the good spot here. Probably on S&P could plant a runner and then like a couple micros and then just grab the dip when it dips. Now keep in mind, and it's just, I think it's not selling off today. It would be the end of the day before anything happens, but here is where we're going to support. So I'm going to grab dips down there if it does dip. I could plant a long contract on the S&P just to let it move. This is what we call the Arby's trade. So zone is sort of that range. It didn't fall all the way down after it filled the gap, but that's like res is pretty nasty. Go check NVIDIA real quick. All right, so I think after this, I think this is probably where Nasdaq's going to sell from. But I'm comfortable not doing anything. This is a liquidity pocket trade though. EST setup. I'm kind of like wanting to avoid this today, to be honest. I don't know about you guys. Nasdaq rallying with negative res, so but it is EST every single time long setup on the breakout. I'm going to hold off on it. If I were a shorting man, I'd be pressing the short button right now. Unless things got better. But as a longy man, you can always take the EST long setup. I think in the particular mode that we're in, I don't want to do anything. And just wait it out. Friends, do me a favor, smash the like button. We'll be doing a giveaway pretty soon. If I nail this, that'd be kind of fun. DD ratio is good enough to not chase a short. It's obviously support here, but I'm gonna try to be a smarter than the average trader and wait. Let the range play out better before I take a spot. This is a really solid long setup-ish with a B setup run. But the idea that it can fall 100 points, I don't care if there's some micros at it or anything. I'm gonna wait and let it pull back. I'd love to get that A set up down here on bull zone, and that'd be pretty solid. I actually prepare for micros in case I do want to do micros. Range state, yep. Yep. I'm feeling it, you guys. If we get to LP though, that'd be kind of nice. That's the one thing that does worry me about today, is that it might even pop higher before it turns around. But I do think I'd like to get this particular trade like a better setup. Well, that's moving quick. So this is the LP, the long setup. I didn't take it either. It's down here. Just kind of combine the two together. So this will complete the move at 320. Pretty solid. Yeah, EST, good setups from here to here. Other than that, that's what I was wanting to see. This is good. LP, yeah, from here to 320. 320 is the jam right now. I did say I could throw some micros at it, but I just didn't want to hold it in case it fell 100 points. At least at the open. Just a little too violent at the open here. S&P is actually looking pretty solid too, which is good. Quickie little rip there. S&P has nothing until 64.40, which is good. Nasdaq completed its move to zone. That's pretty awesome. That was about all I had. Other than that, I was ready to just chill and sit out from there. That'd be it. So there was no evidence to long off of this, but there was a possible grab a quickie scout from here to here. To be honest, I would be, if I were to grab that, I would have been sitting out. But I think in like this opening move, I don't want to take a lot of risk on this. This could be the high of the day. This could be the range trade. And if we do get a big ball bull breakout, I would be impressed to see that happen. But I think the fact that I only have a half day today, so I have to leave at noon to go to the dentist one more time. I'd love to see a big fat green day that goes all the way up to 64.64. That'd be perfect. Because if we get all the way up here, I'm back to buying puts again for the next month. So I'll buy monthlies and give it like another month to play out. I've kind of been waiting for a big up green day today so I can get a really good discount on puts again. So if we do rally, cool. I'd be excited to see that. But we'll be careful. Might have one more test at the pocket from here to here one more time. Yeah, it's all, everything's green across the board, so there's nothing red. We might get a big old update today. Just a big bounce. If we do break through bull zone, there's another bull bear bull pocket, so NASA can have another 80-point rip if we do support through here. I don't normally chase the bull zone break. I usually let it break and then retrace, and then I'll take the long. But the momentum's pretty solid, so let me go back and show the new setup now. If it breaks through here and if it supports, could take a long here. But for whatever it's worth, today is looking pretty solid. Everything turned bullish again. Greater market indicators all bullish. No shorting, no fading this. I wanted to see it dip all the way to blue so I can grab the A+, but I didn't get it. So the 1B setup would have been nice. Oops. Let's just cover it up. You guys can't see it. Hold on, I'll be right back, guys. Hold on. I'm gonna go take the trash out. I'll be right back. We're back, baby. Out of breath, Matt. Whew. All right. How you guys doing today? Ooh, I'm out of breath. I have to run up down and get the trash taken out. Pat Willian tweeted a post. He got a $12 million with my funded futures. He's lying. He's just trolling you guys. You're getting a $12 million deal. He's just being funny. Woo! Ran up 4 flights of stairs here. How long is my driveway? I had to like get all this recycle box broken down for today. Alrighty. No good setups from here. I would say that if we do break the bull zone, it could move, but I still think we're coming down. And I'm not going to bet on it. I'd love to see support down in here. I'd like to play this area, but I don't think we're going to get that tonight or today, but we'll see. I honestly think that this is where we'll be today. Does anybody have a link for Powell? Jackson Hole coverage. Here it is. I found it. It starts in 5 minutes. Okay. We got that on the side. This is ripping, yeah. Bum, ba, bum, bum, bum. I only get a half a day because of my damn dentist appointment, so I probably not gonna make any trades. I do think we're pulling back. We'll see. I don't know. We'll check some stocks here. Nvidia hitting a resistance. Apple below MHP, so that's 2 resistances. Amazon below MHP, that's 3. Microsoft below MHP, that's 4. Meta, okay, so Meta's good. Tesla breaking through MHP, which is good. So we have some good, some really bad. Google kind of average. Your guess is as good as mine, guys. But I think yeah. So today's setups, if I can get the pocket down in here, this would be nice, or the hedge pressure down in there would be really nice. Glad I didn't chase that long, baby. EST long setup, but I have the willies about it. I know we do EST every time, but on breakouts, I'm not the biggest fan of breaking out and taking a chase. If we open in bear zone, we're likely to stay in bear zone most of the time. That is the probability. So EST would be like if we open in bull zone and I dip in bear zone top, then I'll take it. Bear zone top chase is not something I always take because I tend to lean to the side we're going to stay in the zone we opened in. Very good intuition today, guys. If you guys have not done anything, then congratulations. Your intuition's pretty solid. Somebody said they listen to YouTubers as indicators. If I was listening to a lot of YouTubers, I feel like I don't know anybody out there that I would probably use as an indicator. Maybe a counter indicator. I'm just kidding. Just kidding. Trump will try to counter whatever Powell says. Yeah, Powell's going to say something along the lines of we are experiencing and you know, data is starting to reveal the fact that tariffs costs are being passed on to the consumer. And it's very likely that the data is going to show increased inflation, yada yada, Michigan numbers, blah blah. And then Trump's going to say Powell just needs to cut rates. He doesn't know what's best for him. He doesn't know what's best for the economy. He's an anti-American. Trendline Tory. That's funny. All right, so my intuition was pretty good not to chase the long. How many people here took a trade? Did you chase the long and get out? Did you take a short up here? What did you guys do? Is anybody here in trouble right now with this kind of choppy day? Did you short that and long that and you're stuck in the middle? Keeping my shit at a big fat 0 right now. Short of the top, in and out. You guys are chill? Is that crap? All right, check S&P really quick. P ratio is good. Look at that. Who knows what's going on there? Thank God I'm not in any fucking trade right now. Upper DD band, shit. Okay, wait. What is going on here? Well, sitting out was best policy, guys. Holy shit. What on earth was that? No clue. How's talking right now? Damn. Oh, Papa Bear's gonna buy his puts today, and that's good. I feel so happy when shit like this happens and I don't have like anything on the table. Would have been nice to have caught like whatever random long that was, but sitting out's the best policy. Really no clue, guys. I'm trying to find the news here. Nothing is showing up on my financial juice. Also my financial juice has crashed. Let's see if I can reload it. Financial juice isn't loading up, so I don't know what's going on. Do you guys have anything? Front running some Jackson Hole stuff. Financial juice is not loading up. The whole website crashed, so the video that I have does not have Powell talking. Hold on. Oh. What's going on over here?
Imagine being able to build.
Okay, I'm sitting here. Oh, financial juice sucks today. FJ Complete's crashed out. Okay.
Powell puts it, they're still looking at these as one-time price adjustments.
The 2-year yield absolutely tanked, so let me try this really quick.
Inflation is going to go up, but then they think it stabilizes and might go down again.
Bonds went up.
Let's take a listen to Jay Powell, chair of the Federal Reserve.
In my remarks today, I will first address the current economic situation and the near-term outlook for monetary policy. I will then turn to the results of our second public review of our monetary policy framework, as captured in the revised Statement on Longer-Run Goals and Monetary Policy Strategy.
Shifting balance of risk may warrant adjusting policy. The situation suggests downside risk to employment are rising. The situation suggests downside risk to employment are rising.
Our policy rate had stood at 5.25% to 5.5% for more than a year. That restrictive policy stance was appropriate to help bring down inflation and to foster a sustainable balance between aggregate demand and supply. inflation had moved much closer to our objective, and the labor market had cooled from its formerly overheated state. Upside risks to inflation had diminished, but the unemployment rate had increased by almost a full percentage point, a development that historically has not
I ranked this 3 out of 10.
outside of recessions.
Like, obviously, the VIX being where it is can be
Over the
extra
subsequent
sensitive. I didn't think it was going to have this big of an
market
impact.
committee meetings, we recalibrated our policy stance, setting the stage for the labor market to remain in balance near maximum employment over the past year.
This is your sensitivity to
This
catalyst,
year,
right?
the economy has
Or
faced
events.
new challenges. Significantly higher tariffs across our trading partners are remaking the global trading system. Tighter immigration policy has led to an abrupt slowdown in labor force growth. Over the longer run, changes in tax, spending, and regulatory policies may also have important implications for economic growth and productivity. There is significant uncertainty about where all of these policies will eventually settle and what their lasting effects on the economy will be.
So
Changes in trade and immigration
when we talk about, guys,
policies are affecting
when
both
you're
demand
market
and
sensitive
supply.
to events and news, this is
In
what
this
the
environment,
Triple B tells you.
distinguishing
It's sensitive to
cyclical
news.
developments from
Now,
trend or
I
structural
underestimated
developments is
how
difficult.
drastic it would
This
be. I thought it would
distinction
be
is critical because monetary
that they wouldn't
policy
say
can
anything
work to
different. It
stabilize
looks like he
cyclical
hasn't said anything
fluctuations,
different.
but can do little to alter structural changes. The labor market is a case in point. The July employment report
When
released
Powell has the
earlier this
press
month
conference,
showed
last
that
time it
payroll
wasn't
job growth slowed
this
to an average
responsive
pace
because
of only
because
35,000
the
per month
volatility was
over the
different.
past 3 months.
Well, this is that thing we teach you guys.
168,000 per month during 2024.
You learn a valuable
This
lesson today if you
slowdown is
are
much larger than
trading
assessed
into an
just
event
a
when
month
VIX is
ago,
above Triple B. The
as the
sensitivity is
earlier
there. I
figures for May and
kind
June
of
were revised
decided to
down
do nothing, and I'm
substantially.
glad I did nothing.
But it does not appear
Nice to
that
grab the
slowdown
long
in
at
job
the
growth has
liquidity
opened up a
pocket and
large
couldn't get that
margin of
blasted,
slack
but
in the labor market, an outcome we
everything's
want to
tradable.
avoid. The unemployment rate, while edging up in July, stands at a historically low level of 4.2% and has been broadly stable over the past year. Other indicators of labor
Inflation's
going to
hold and unemployment going up. Yeah, market hold my beer, right?
Only modestly, including quits, layoffs, the ratio of vacancies to unemployment.
There's no such thing
and
as an
nominal
upside
wage
catalyst. Good question, Ian. So upside
Labor
moves are
supply
risk
has
interval. We don't
softened in
consider a
line with
catalyst.
demand, sharply lowering
Catalyst is
the
only
break-even
a
rate
problem
of job
because of increased
creation
volatility. You
needed to
can
hold the
it can
unemployment
catalyze
rate
upside
constant.
moves, but upside
Indeed,
moves
labor
absolutely
force
crush the
growth has slowed
volatility. So
considerably this year with the
like
sharp
you
fall
wouldn't
off in
short
immigration, and the
at
labor
all
force
in an event like that.
participation rate has edged
You wouldn't.
down
You wouldn't.
in recent months.
But like the idea is that downside catalyst because the
Overall, while the
volatility
labor market
increases
appears
when
to
you're
be in
moving lower.
balance,
You
it
don't
is a
want to
curious
play the
kind of
short side.
balance that results
Upside
from a marked
catalysts or
slowing
upside
in both
events we don't
supply
consider like an
of
automatic sit
and
out.
demand
Upside
for
catalysts you can
workers.
assume
This
that
unusual
volatility is going to like
situation
tighten.
suggests that downside risks to employment are rising.
Upside moves don't get
And if
volatile
those
as they
risks
move up.
materialize, they can do so quickly in the form of sharply
So
higher
upside moves tend to
layoffs
be a
and
little
rising
more
unemployment.
beeline.
At the same time, GDP growth has slowed notably in the first half of this year to a pace of 1.2%.
The reasonable base
roughly
case that
half the
inflation effects of tariffs will be
2.5%
short-lived.
pace in 2024. The decline in growth has largely reflected a slowdown
let
in
me go get you
consumer
the things.
spending. As with the labor market, some of the
Chat.
slowing
Oh my
in
God, look
GDP
how awesome she is.
likely reflects
Yo,
slower
look at
growth
this.
of supply or potential output.
What do we have here, Shep? What is it?
Turning to inflation, higher tariffs have begun to push up prices in some
Avocado toast.
categories of goods. Estimates
All right,
based
I'll be
on
right
the
back because we're
latest
hanging up some
available data
paintings,
indicate
pictures. I
that
got to get
total
some
PCE
command I'll be right
prices
back.
rose
That's pretty damn good.
2.6% over the 12 months ending in July. Excluding the volatile food and energy categories, core PCE prices rose 2.9%, above their level of a year ago. Within core, prices of goods increased 1.1% over the past 12 months, a notable shift from the modest decline seen over the course of 2024. In contrast, housing services inflation remains on a downward trend, and non-housing services inflation is still running at a level a bit above what has been historically consistent with a 2% inflation. The effects of tariffs on consumer prices are now clearly visible. We expect those effects to accumulate over coming months with high uncertainty about both timing and amounts. The question that matters for monetary policy is whether these price increases are likely to materially raise the risk of an ongoing inflation problem. A reasonable base case is that the effects will be relatively short-lived, a one-time shift in the price level. Of course, one time does not mean all at once. It will continue to take time for tariff increases to work their way through supply chains chains and distribution networks. Moreover, tariff rates continued to evolve, potentially prolonging the adjustment process. It's also possible, however, that the upward pressure on prices from tariffs could spur a more lasting inflation dynamic, and that is a risk to be assessed and managed. One possibility is that workers who see their real incomes decline because of higher prices demand and get higher wages from employers, setting off adverse wage price dynamics. Given that the labor market is not particularly tight and faces increasing downside risks, that outcome does not seem likely. Another possibility is that inflation expectations could move up, dragging actual inflation with them. Inflation has been above our target for more than 4 years and remains a prominent concern for households and businesses. Measures of longer-term inflation expectations, however, as reflected in market and survey-based measures, appear to remain well anchored and consistent with our longer-run inflation objective of 2%. Of course, we cannot take the stability of inflation expectations for granted. Come what may, we will not allow a one-time increase in the price level to become an ongoing inflation problem. So, putting the pieces together, what are the implications for monetary policy? In the near term, risks to inflation are tilted to the upside and risks to employment to the downside, a challenging situation. When our goals are in tension like this, our framework calls for us to balance both sides of our dual mandate. Our policy rate is now 100 basis points closer to neutral than it was a year ago, and the stability of the unemployment rate and other labor market measures allows us to proceed carefully as we consider changes to our policy stance. Nonetheless, with policy in restrictive territory, the baseline outlook and the shifting balance of risks may warrant adjusting our policy stance. Monetary policy is not on a preset course. FOMC members will make these decisions based solely on their assessment of the data and its implications for the economic outlook and the balance of risks. We will never deviate from that approach. So, turning then to my second topic. Our monetary policy framework is built on the unchanging foundation of our mandate from Congress to foster maximum employment and stable prices for the American people. We remain fully committed to fulfilling our statutory
Look
mandate.
at that Fed day craziness. So this is what happens when you get your VIX in this weird spot where market's just extra sensitive to news.
Statement on longer run goals and
Greater bull market, all data was bullish, so I didn't take a short. Thank God I'm not sitting there in a short.
We pursue our dual mandate goals.
I had a feeling it would dip. I was waiting for something to happen to dip and grab a dip to buy, but sometimes you just miss out on this, and not every day is an event you can trade on. But at the end of the day, if we close high, I'm ready to load up on some puts for the next month.
The changes we made in this review are a natural progression, grounded in our ever-evolving understanding of our economy.
Traders resume fully pricing in 2 rate cuts by the end of the year.
Adopted in 2012 under Chairman
That is incredible.
Ben Bernanke's leadership.
Look at the Fed watch.
Today's revised statement is
71.6 before.
Public review of our framework
Should be up in the 90s again. No, 75.6. Okay.
This year's review included 3 elements: Fed listens events at reserve banks around the country, a flagship research conference, and policymaker discussions and deliberations supported by staff analysis.
90% probability now to 75%. This is the one thing that I think is starting to change. The effects of tariffs on consumer prices are now clearly visible. I expect effects to accumulate in the coming months. So this is
those changes.
This is that, you know, this is that delay in PPI past the CPI. In the coming months, you're going to see it start to reflect. Traders add bets on Fed interest rate cuts in September. The reasonable base case and inflation effects on tariffs will be short-lived. This is really, I think, what's doing it.
By the proximity of interest rates to the effective lower bound, or ELB.
It's possible that tariff-driven upward pressure on prices could spur a lasting effect on the inflation dynamic, but it is unlikely given downside risks to the labor market.
Inflation was not very responsive to slack in the
So yeah, I mean, this is kind of putting more, at least Powell's spin on things that the problem is going to be short-lived. It's transitory.
Long years following the onset
He's wearing a purple tie. We should have known, right?
In late 2008. Many here will recall the sluggish
purple means he's for the people.
recovery of that era. it appeared highly likely that if the economy experienced even a mild downturn,
What do you guys make sense of this, right?
Would be back at the ELB very quickly.
So a pump like this flattens volatility. I would say that today, a market like this probably just makes its way higher and stays higher. And tomorrow will probably be an overreaction. Like today is just going to do what today's going to do. So as we interact with this triple B, we still got some more upside movement here.
Triggering an adverse
I would say,
the economic conditions that brought the policy rate to the ELB and drove the 2020 framework changes were thought to be rooted in slow-moving global factors that would persist for an extended period.
And there we have it, guys.
And they might well have done so, if not for the pandemic.
We did wake up today to all signs bullish again.
Included several features that addressed the
I was being just a little hesitant to not take anything.
Had become increasingly prominent over the
pass through pocket all the way up to bull zone and then keep going. But I mean, it's like a gamble, right? So the idea is you could celebrate making money here, you can celebrate, or you can cry losing money here, but in reality, knowing that the Jackson Hole conference is happening and knowing that VIX is above contango midpoint, markets can be overly sensitive. It's just silly to have any bet going into it. Half the time you'll win big, half the time you'll lose big. And, 300-point rip in the Nasdaq.
That following periods when inflation had been running persistently above 2%, appropriate monetary
policy almost 100 points in the S&P here. 12 to 80. Now I could jump in and chase this, but days like this, I don't like to play in this. It's not how I make my money.
The
Powell sneeze and the market has new stools.
The highest inflation in 40 years to economies around the world. Like most other central banks and private sector analysts, through year-end 2021, we thought that inflation would subside fairly quickly without a sharp.
Wait, you went from 154.430 to 159.230, and you over the 50% mark?
When it became clear this was not the case, we responded forcefully, raising our policy rate by
what kind of account is that, Jeff?
Over 16 months. That action, combined
if
with
that's 2 trading days,
pandemic supply disruptions,
430, and then this one is
closer to our target.
You will be over 50%. Yeah, if that's just 2 days worth of trading, you will be over 50%. Because your second day is bigger than your first day.
How economic conditions have evolved over the past 5 years. During this period, we saw that the inflation situation can change rapidly.
Never in your life have you seen a 200-point 1-minute fair value gap.
Interest rates are now substantially higher
than
was the case during the era between the global financial crisis and the pandemic. With inflation above target, our policy rate is restrictive, modestly so in my view. We cannot say for certain where rates will settle out over the longer run.
Everything is saying reversal. When I see days like this, I say reversal tomorrow, right?
Demographics.
Bumps like this, I never say we fade today, but honestly, if today goes higher to close at the high, I'll do what I did last time the market did this, and I'm going to use this as my opportunity to grab dirt cheap puts at the last moment of the day. 1 minute for market closes.
On an overly specific set of economic conditions may have led to some confusion, and as a result, we made several important changes to the consensus statement to reflect that insight. First, we removed language indicating that the ELB was a defining feature of the economic landscape. Instead, we noted that our monetary policy strategy is designed to promote maximum employment and stable prices across a broad range of economic conditions. The difficulty of operating near the ELB remains a potential concern, but it is not our primary focus. The revised statement reiterates that the committee is prepared to use its full range of tools to achieve its maximum employment and price stability goals, particularly if the federal funds rate is constrained by the ELB. Second, we returned to a framework of flexible inflation targeting and eliminated the makeup strategy. As it turned out, the idea of an intentional moderate inflation overshoot had proved irrelevant. There was nothing intentional or moderate about the inflation that arrived a few months after we announced our 2020 changes to the consensus statement, as I acknowledged publicly in 2021. Well-anchored inflation expectations were critical to our success in bringing down inflation.
No. I don't trade in the news events. Look, be careful with people out there that are trading news events like this. There's going to be half the people who are going to be out there shorting in one prop, longing in one prop, and then showing you the winning trade. Just I'll be careful about that kind of stuff. I completely sit out of this crap. That way I don't ever take losses.
Without compromising price stability.
Millions aren't made on news coin clips at all. So inside of here, the question is, where can I actually play from here?
where no two moments are like the next.
But I'm seeing a lot of
where
social
every
media
detail
folks like, I caught the
is
dip, I got the
intentionally
dip. And
crafted
one of the
match
biggest kind of schemes in prop
the
is a lot of
Ritz-Carlton
people
yacht
will be just
collection,
shorting in
unlike
half their
the
accounts
rest.
and longing in a different
Through loud
prop
and
account
clear
somewhere
at our
else.
Fed Listens events.
And then
The past
always
5
scream
years have been a
every
painful
event, get it right every
reminder of the
time.
hardship that high inflation
Gambling is not
poses,
something you will really do as a
especially
trader.
on those least able to meet the higher costs of necessity.
Reversal Monday. Yeah, well, tomorrow being like
Third,
Monday.
our
I wouldn't say
2020
reversal
statement said that we would
Monday,
mitigate
but I do think
shortfalls
that whatever
rather than
effects they're
deviations
having
from
here, that the
maximum
rate cut
employment.
is not
The
necessarily.
use of shortfalls reflected the insight.
I don't think we're going to get 2 rate cuts. I think I said we'll get 1 if we're lucky.
And hence of maximum
Powell's
employment
comments are very
highly uncertain. The later years of the
optimistic, though.
global financial crisis recovery featured employment.
I'm going to do what I did before, is just get
extended
puts to hedge.
above
Not
mainstream
trying to be bearish
estimates
to
of
the
its
market, but
sustainable
what I
level,
always do is just get puts to
along with
hedge.
inflation running persistently
Where the heck is
below our
my-
2% target. In the absence of inflationary pressures, it might not be.
It would have been nice to
necessary
have caught a
tighten
little bit that
policy
long, but
based solely on uncertain
absolutely
real-time
not
estimates
excited
of the
to jump
natural
in
rate of
and-
unemployment. We still have that view, but our use of the term shortfalls was not always interpreted
Trump,
as
I
intended.
will fire Fed's cook
raising
if like Trump is
communications
talking right now.
challenges. In particular,
Y'all want to talk about? Y'all want
the
to listen
use
to
of
Trump first?
shortfalls was not intended as a
Let's listen to the more exciting.
My kids like TikTok. Young people love TikTok. If we can keep it going, good. And we're
Let's
going
listen to
watch
Trump.
the
Did we get a rate cut?
security
No,
concerns.
no. But
we have
Powell's
buyers, American buyers. We have American
commentary
buyers. And I haven't spoken to President Xi about it at the right time.
has
when we
led
said
traders
I'll
to
do
price
it.
in 2 rate
In the
cuts by the
meantime,
end of the year.
until the complexity of things work out, we just extend a little bit longer. But we have buyers. We have very substantial American buyers that want to buy it.
President Trump, would you like Congress to give you more control over DC when they return from recess?
Look, DC is a miracle what's happened. I mean, they can come up with fake numbers like the mayor is doing. Oh, no, it was going down for 20 years. You didn't live here. You know, have you been mugged, okay? DC was a hellhole, and now it's safe. And in fact, I put out this morning, I said, I hate to say this
Watch a
because it
200-point
doesn't
red
sound
candle
very
now.
good, but there have been no
Dude,
murders
I
in
wouldn't
DC
be
in the last
at
week. That's
all
the first
surprised.
time in anybody's memory that you haven't had a murder in a week. And I think the mayor has to get on the ball because we have a situation.
You been playing longs with micros? Oh, hell yeah, nice.
But I'll tell you what, she's got to get on the ball. We have. I don't want to
Powell
see
pumps,
phony
Trump
numbers.
dumps.
DC hit an all-time high last year of absolute total crime, and it continued pretty bad. And then we put some strength into it, got the numbers down a little bit, but we brought in the DC National Guard, and we coupled them with the police, and it has been amazing. I have friends that live here, people that work in the White House, but I have friends that live here. They're all going out to dinner now. They haven't gone out in years. One man, I told this story yesterday when we were with the police and with the National Guard. We had a great little celebration, brought them hamburgers, brought them pizza.
You guys would be
But we were
so
with them,
funny
and
if this
I
ends
told
up
the
down
story
here
about
today.
one friend hasn't been out in 4 years to a restaurant.
I don't think it will
And
be,
now he's
but-
been out 4 nights in a row. He called me this morning, by the way. He said it's so safe. He feels like totally safe. He can walk. He's got a 10-block
Prop firms would
walk. He
definitely
walks
love
it.
this price
He
section.
wouldn't have
Oh,
walked those
100%.
10 blocks. He said it would be
100%.
a chain of hell, he called it. He said it was just horrible. He had no chance of making it to the 10th block.
For me,
And
I'm
the mayor
very
has
proud
to admit
of
that. You can't
having
say
control and
it
not
was
needing to
just like
trade every minute. Market
it
moves.
hasn't been clean. Now it's going to be clean. I'm giving out a contract very soon. Susie's with me. We're going to be raising.
You know what? Let me go back to listening to Powell because Powell's going to say stuff
permanently
that's
forswear
important.
preemption or to ignore labor market tightness.
Trump is. I'll
Accordingly,
read what
we
Trump says
removed
and listen to Powell
shortfalls from our
instead.
statement. Instead,
just rambling
the
about
revised
margin and
document now states more precisely that the committee recognizes that employment may run at times above real-time assessments of maximum employment without necessarily creating risks to price stability. Of course, preemptive action would likely be warranted if tightness in the labor market or other factors pose risks to price stability. The revised statement also notes that maximum employment is the highest level of employment that can be achieved on a sustained basis in a context of price stability. This focus on promoting a strong labor market underscores the principle that durably achieving maximum employment fosters broad-based economic opportunities and benefits for all Americans. The feedback we received at Fed Listens events reinforced the value of a strong labor market for American households, employers, and communities. Fourth, Consistent with the removal of shortfalls, we made changes to clarify our approach in periods where our employment and inflation objectives are not complementary. In those circumstances, we will follow a balanced approach in promoting them. The revised statement now more closely aligns with the original 2012 language. We take into account the extent of departures from our goals and the potentially different time horizons over which each is projected to return to a level consistent with our dual mandate. These principles guide our policy decisions today, as they did in the 2022 to 24 period, when the departure from our 2% inflation target was the overriding concern. In addition to these changes, there is a great deal of continuity with past statements. The document continues to explain how we interpret the mandate Congress has given us and describes the policy framework that we believe will best promote maximum employment and price stability. We continue to believe that monetary policy must be forward-looking and consider the lags in its effects on the economy. For this reason, our policy actions depend on the economic outlook and the balance of risks to that outlook. We continue to believe that setting a numerical goal for employment is unwise because the maximum level of employment is not directly measurable and changes over time for reasons unrelated to monetary policy. We also continue to view a longer-run inflation rate of 2% as most consistent with our dual mandate goals. We believe that our commitment to this target is a key factor, helping keep longer-term inflation expectations well anchored. Experience has shown that 2% inflation is low enough to ensure that inflation is not a concern in household and business decision-making, while also providing a central bank with some policy flexibility to provide accommodation during economic downturns. Finally, the revised consensus statement retained our commitment to conduct a public review roughly every 5 years. There's nothing magic about the 5-year pace. That frequency allows policymakers to reassess structural features of the economy and to engage with the public, practitioners, and academics on the performance of our framework. It is also consistent with several global peers. To wrap up, I want to thank President Schmid and all of his great Kansas City staff who work so diligently to host this outstanding event annually, counting a couple of virtual appearances during the pandemic. This is the 8th time I've had the honor to speak from this podium. Each year, this symposium offers the opportunity for Fed leaders to hear ideas from leading economic thinkers and focus on the challenges we face. The Kansas City Fed was very wise to lure Chair Volcker here to this national park.
The speech is literally written by ChatGPT.
And I am
said,
so proud to be
feel
part of that tradition. Thank you very much.
That was Fed Chair Jerome Powell wrapping up his annual Jackson Hole remarks. What a Jackson Hole speech that was. This is Bloomberg Surveillance on television and radio, live from Jackson Hole, Wyoming. What we heard there is they are prepared to move rates lower on the heels of their dual mandate being in conflict. We see a market reaction. We could see 10-year yields are lower.
So here's what's happening. Let me give you guys the scoop. All right, so this is the age-old problem that you have with the Fed having the ability to. Let me teach you guys what happened, okay? Here's what's going on. What a Jackson Hole. Okay, if the stock, okay, starting right now. We all know inflation, right? We all know tariffs are causing inflation. Tariffs are going into PPI, going to CPI, and then prices are going to go up. Inflation. We all know this is happening, okay? Now, with inflation, it slows down the economy. So as the economy slows down, the market stops rallying, right? Market stops rallying. When they say the dual mandates in conflict, this is what's going on. See, one of the things that they don't tell you they do, and you know, it's always kind of a thing that the Fed doesn't care about the stock market, but they do. Because what happens is if the market becomes unusually volatile, like the Fed doesn't act quick enough, the market can sell off and then create a cascading effect where markets can crash. Okay, like we learned with the tariffs earlier in the year. What happens here is that companies can start layoffs. Okay, when the market is crashing, companies start laying people off. What happens when you lay people off with high inflation, layoffy? You get stagflation, and the Fed is in a moment where you have a conflicting sort of portion of their dual mandate, which is obviously looking at the risks to the labor market that can come from stock market tumbling and the economy slowing down. So you don't want people to get laid off. So the Fed has the ability to say we might be lax on our policy to just give the market some hope by cutting rates to stimulate the market, to preserve the employment market because it has been stalling out. And hopefully, in the meantime, inflation will naturally come down and get short-lived. And what Powell's probably saying between the lines is that after Trump leaves office, the next person's going to axe the tariff. So we've got 4 years to make this bet. This is what I think is happening. The inflation forecast is 3.2 for September, right? And it's going to be probably slightly higher until the end of the year, but it's probably short-lived. I think over time, right, you're going to get that spike of inflation and the companies are going to start to become like more efficient. I agree with you. And the idea is Powell says, well, let's keep the stock market from crashing for just the next couple of years and let inflation naturally come down, and then everything will neutralize. Because if they don't act quick enough and the market turns bearish and sells off, you might deal with unemployment. And what happens when you have stagflation, where people are getting laid off and there is high inflation, the only solution to that is the Fed has to come in double to rescue everybody, with bailouts and shit like they did before. So this is to avoid a bigger problem. It seems like the Fed is willing to just go against the single mandate of interest rates and inflation being correlated, to say we also have to look at the labor market because it's in conflict. The two are conflicting each other. Let me see what he said exactly about the labor market. The downside risk to the labor market is rising, and that's really where the conflict. What do you guys think about what I'm saying with the conflict, and what are y'all's take on this? Right? Is Powell just willing to, Fed's willing to just say, fuck it, we're going to cut rates anyways to keep the stock market looking good so people don't get laid off, because we can't risk that by not acting fast enough. Oh, dude, Trump is going to have a field day with that. He's going to, I know it. Let's go to where Trump is talking, if he's still talking, because Trump's going to be like, I told you I was right. They didn't act fast enough. Blah, 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 blah. Cut tariffs, problem solved. This really hinges on the CPI read. Well, CPI is going to come in pretty nasty, I feel. What do you guys think about that? I have this feeling that CPI is going to be pretty bad. And I don't know if the market's going to react to it or not. It's a bad time to be an employee. Yeah? You think Powell's on target? Yep. But if it's 3%, 3.5 or even 4%, yeah, like that could cause companies to lay people off, and then that's going to have a bigger effect on the problems. Imagine if companies have to lay people off and people are laid off with high inflation, and then the economy is already generally slowing down because of the tariffs. The market or the economy can enter a hole that can be a cascading effect of further layoffs and further price raises. Company has to lay people off and raise prices just to keep the lights on. Then the economy is just going to grind to a halt. And I think that apparently Powell's seem to be spooked by the downside risk in the labor market. I mean, spooked. Like, this is like a complete 180 to what he said at the press conference last meeting. Like, the labor market conditions are actually starting to spook these guys. I don't know. Or they're buckling to the pressure from the president. I don't even know. Absolutely cooked. I think Matt is correct. This is the first quarter we're going to see the effect of the tariffs. Yeah. And it's probably just going to be kind of like maybe like a couple months, if not the rest of the year, of we're going to see the ramping up of prices. And then I think it should stabilize before next year. I feel like as nothing gets worse, companies are going to quickly adapt. So I would say at worst, we have maybe 6 months, no more than a year of price raises that are increasing. I think maybe even sooner than that, it might taper off. And this much, how much do you want to bet if they cut rates, the tariffs, the skyrocket this shit? Well, that's the whole goal, right? Is that, Powell's now essentially saying because if the stock market crashes too far, people get laid off. The same thing they had with QT, right? I mean, the market was like rallying at all-time highs, and then they announced QT, and then that's when we sold off for a year. They didn't announce it right after COVID, even though they've been trying to get out of the stock market and get out of the market for a long time, get out of their easing policy since the last recession. And I'm sure they would initiate a QT in freaking 2020 or 2020, right around then. And I think COVID got in the way, and they're like, well, shit, we can't announce QT now. Let's wait till the market rallies back up. Then once we got the highs, they announced it where the market could absorb that impact. Imagine their original plan would have been like quantitative tightening to start to take effect around earlier than 2020. That's what I always thought. So now the market's sort of like peaking out at highs and labor market's looking weird and tariffs are high. They're just not going to take a rugged stance. And essentially they're going to. So what happens if they cut rates too quick? And again, a quarter of a point's not that big of a deal. But they cut rates too quick. What it does is it overstimulates the credit market. And then what happens is people buy stuff on credit more often. And not only do they buy stuff on credit, so they rack up a lot of debt. If the prices go up, then they have to kind of take more credit out and more debt. And then if there's a risk to them getting laid off, then what happens is you now have bigger defaults because there's more debt because prices are higher. So this is what's going to happen is that Powell's trying to preserve people's employment, and we're gonna kind of float on credit for a while to buy the stuff we can't afford because of the inflation, and then hopefully over time prices come down and stabilize and people can pay off their debts without getting laid off. If people get laid off, then that crashes the credit market, and this is where Powell's spook is coming from. Apparently, he's looking at some data I'm not looking at because you wouldn't care about risks to the downside labor market if you didn't really see that the risks are pretty big. And the risk of people getting laid off comes down to the fact that the economy slows down and then everybody defaults on their credit cards and then banks don't loan out any money. And now you have high inflation, high unemployment, and no credit. And then you enter the Great Depression again. But is 5% tariffs like real, or 5% inflation really that big of a deal to cause all of that? That's my thought. I don't know. You want run rate cut in September, then 3 the next year because I want a new house next year. LOL. This gives a company a reason to lay people off. We're starting next 3.5 years. Things aren't good. Rates don't help the middle, lower class, and inflation, just more debt default. Yeah, top dog, you nailed it. Like that's exactly my take as well. I agree with you. It doesn't help the lower middle class income. It just burdens them further. It burdens them down the road as they rack up a lot more debt now that they can't pay off. Yep, you nailed it. These major companies are not lowering prices next year. Usually raise prices again with the new year, passing along costs to small business like us who pass it along to you. Yep. All right, guys. Rockets here are going to get a 20% increase on tariffs. You know, we got to preserve jobs here. I can't lay slacks off, so you guys have to pay double for your memberships now. So sorry about that, you guys. we downside risk to the labor market. We can't lose slacks. Just kidding. Gold Marie is correct. They basically increased the money supply by 40% back then. Yep. Right. They increased. They caused it by money supply expansion in 2021. Yep. How do you feel about Jackson's hole? I feel like Jackson's an a-hole. That's what I feel like. But hey, like nice, crazy bull run market here. Honestly, I'm proud of myself. Again, you guys get to, I know it's like not the sexiest thing in the world to not make a trade and miss out on a big move. But I'm going to tell you, it may not seem sexy as a streamer to not engage in the market that's just a fucking coin flip, right? But you know, it is sexy being rich and not gambling it away on coin flips. That's really sexy when you feel sexy when you go to the bank. So be careful when you guys are out there. There's a lot of people that are going to be today, look at all this money I made by my Discord, or look at all this money I made, I'm the best in the world. It's got a lot of people absolutely silent. Okay, like where'd you blow up? Here's 2 tricks that prop traders are going to do. You have prop company A, prop company B. And these are the tricks. Long and a bunch off screen, short and a bunch off screen. And then, you know, just tell people, oh, look, I made all this money. And then, you know, show the one that won and hide the one that lost. And then you can tweet about it. And then everyone thinks you're awesome at trading because you can predict something. Well, you can't, right? We know we can't. The other thing is a lot of people that are, you know, constantly making money, gonna be quiet today, didn't do anything. Well, you know, unless they announce up front, I'm sitting flat like I did, you know, they probably blew their shit up and don't want to show you. Anybody that talks about their trades today is a novice trader. So those of you out there following other people, listening to other people, if anybody has any comment about trading in here, they're absolutely an amateur. You guys are professionals. Okay? Only amateurs gamble on stuff that's unpredictable. That doesn't sound fun to me. That's 50-50, right? And it could go the other way and you can have a bad day. Professionals are going to say, I don't like what I see, and we have an event coming up, and I know the market's sensitive to events. I'm going to sit out. And this is most, this is why the whole morning I was watching and trying to guess where we would end up. I was guessing, based on, Jackson Hole commentary, hopefully we would get this. And this morning, my prediction was what I drew on the chart was, I hope that we get this. I said, I'd like to see this and this. This is what I drew from there. And then I wanted to see that, right? I drew something like that. So I was waiting all day for a dip to get a rip on. And the fact that I didn't get it, I just didn't get it. But at the start of the day, and even so, my thought was, oh man, we got low consolidation. I don't trust the, triple bottoming. It might actually go down. And then of course, my guess on that was wrong. And then when we got the liquidity maps out the door and we looked at all the indicators are bullish, I was like, well, maybe we dip and rip. Let me get this 1B set up here. And then I didn't even get it. And then I'm like, okay. And so a lot of people right now, maybe people were short, they got busted. And they're like, hey, what do I do here? They're panic trading. Shit, I need to make something that blew up. Right. And there's people doing that. And then other people are like, crap, I missed out on this. Where do I get in? You guys know, I mean, most of my days when I'm making, 10K or 20K days is not based on 100, 200 point moves. It's like a couple of 40-point moves in NASDAQ or, I don't need this to make a lot of money. And this is where the amateurs step in. The actually bad traders were short here and now trying to figure out how to long because they missed out. The good traders are, well, I know that the market's sensitive in news. I'm going to sit out and do nothing. And I'm going to wait to see if the market goes higher. I still believe that the market's coming down over time. So just in case that happens right at the peak of the day, at the very high, 1 minute at 4:15 Eastern, minus a minute in the last minute I have, I'm going to go buy puts that expire a month from now. And I'm going to hold on to them just in case the market sells off. And in case the market doesn't, I'm going to do what I do every day is wake up and long the market every day. First 2 or 3 days, I'll pay the 20K at the end of those puts. And that's it. I've got a 10X trade if the market crashes for whatever reason. I've got all bull indicators to continue bulling the market. So dividend paying stocks now. And they, yeah, exactly right. Props loving. So the props are probably loving today. I would think so. Yeah. I'm going to try puts again at the end of the day, at the very last moment of the day. Not that I'm bearish the market, but puts are for hedging. And the idea becomes, if I wake up every day and VIX does crash below triple B, I might actually exit the puts. So the idea is right now, VIX is at the contango midpoint. It's kind of sitting right there. And the idea is at the end of the day, tomorrow can be a day like this where it bounces and continues to go and continues to go. Today's the perfect spot to buy puts, just in case the market does collapse on further volatility. But it's not now. On days like this, trust me, guys, I wait until literally 1 minute before the market closes. 1 minute. I don't try to guess the high of the day. I will wait 1 minute till the market closes. That's it. And I will buy puts. Options market closes 15 minutes after equities market. I'll buy puts literally right at the top. And then tomorrow I wake up and continue long futures like nothing happened. And in case the market sort of, like we're up here now, sort of like plays out, then I've got a really nice little nest egg underneath me that 1 or 2 days of trading bought that insurance and the rest of it's pure profit. So it's essentially free money at that point. If I continue to take the long side of the market and I got puts on the day that crashes, the day that I blow up all the prop accounts because I'm long and the market crashes, each prop account, pretend that I blew up every prop account I have and it cost me $400 times whatever, 12, right? 48, I lose $4,800 and got to re-up all my prop accounts. But then my 20,000 inputs is up 10x, 5x, right? So the worst case scenario is downside risk. I lose a bit of props and 10x my puts. Other case scenario is market continues to rally and I make 20K a day and then I only spend 20K on puts. It's a smart bet when markets are in a weird spot to just have some insurance underneath you, because that'll totally pay for everything I bust if I bust, right? So that's how I think about it. Data gang, baby, let's go. So the idea is at the very, like days like this, I wait until the very end. I get puts at the cheapest I'm going to get them. So right when that market gets as green as it's going to get, I don't even see this and scare myself and okay, let me jump in the puts now. I wait till like big days like this will probably close strong and green. Because remember, green days don't like to have wicks on them. Talk about green days usually have tiny little wicks. So let's let the day play out. I usually grab them literally as close as I can to the end of the day as possible. When I say tomorrow, I mean trading tomorrow, like Monday. You know, I know tomorrow's Saturday. Play the P&L song. Show me your P&L. Whip it out. Oh, I got a big fat 0 right here. All right, guys. I'm scared to ask, but how'd y'all do today? How'd y'all do today? Bank Statman. Show me your bank statements, guys. By expiration day I'm looking at, I'm gonna have to look at this in a little more detail. Remember, I'm not bearish to the market. All signs are bullish. It's just to have something under my feet. All right, so let's see where the bear side of the market is. Okay, right here. So an example is, let's pretend I wanted to buy puts that expire a month from now. We'll talk about September expiration. I'm going to look at the monthly maps and see where the worst case scenario is on the bear side. And when I look at this, so when you see this, I tell myself, okay, if it is bullish and all signs are bullish, then this is the worst case bull scenario. So whatever puts I have can't be below here because this is where the liquidity is. A worst case scenario, we bounced here in support. So I have to make sure that a month out, I'm somewhere around here. I like to get like right on the edge of the bear zone if I can. Obviously, cheaper if I get further out of the money. But the idea is a day like this could just immediately like tomorrow gap down and start trading down. And then of course, find liquidity and support. So let me see, that's what S&P looks like. Let me double check here. Could be monthly options. And again, I usually don't tell people how I'm gonna do my trade because I don't want y'all to crowd it, but I don't like people copying me on options. So I'm usually very secretive about it. NASDAQ is all liquid right here. So if I go out a month, $550, $555 range, I wouldn't go any further than that because that's a straight up bear market. So the idea is that the market still is turbulent. And after a day or two, if VIX bounces on triple B and keeps going, then I'm pretty good. If VIX clobbers through contango midpoint and falls out, then I can probably just close with a slight loss. But I think it's just like the last time. I wanted to hold something just in case the market tumbled. And this one was a wave that came back down. This one could be another wave that comes back down. But I'll probably do monthlies this time to give it a little more time. This one, I only got about 2 weeks out. So about here, they expired. Worthless. You can see though, if I would have got a month out, I would have maybe got lucky and got something out of it. This is a hard one because the structure is so bullish. But I might do... QQQ is the worst of the two. Well, actually, no, not anymore. They're both very similar. Let me see which one I would do. Nice job, you guys. Sound like y'all did pretty okay. Y'all's losses were small. Some of y'all made some money today. $17, $61. $0 for me, so that's good. Yeah, S&P is like it. God, SPY's at all-time highs again. S&P is way off the bottom. Maybe QQQ is the one that I think that it's going to be the better opportunity. So this is about my target. So if we close up high at the end of the day, I'll probably do $560 or $555 monthlies here. And then if in a day or two it does this and does this, I'll probably close out and readjust. Because honestly, what I'm betting on is the idea that if VIX continues to move off of contango midpoint, then this immediately waves down another wave. I don't feel it as all indicators have turned bullish today. So again, this is just a hedge. It's not a speculative trade. The hedge requires me. Do you guys understand when I say the hedge requires me to continue longing the market? I don't just buy puts and sit on there and bet that the market's going down. The puts, to explain the trade to you guys, the way that it works, hopefully y'all are following what I'm saying, right? So the way that it works is that every day that the market's long, I can make a big green day, big green day, big green day. So after like 1 or 2 days of trading, that profit is what's going to buy the puts. And then if the market keeps going up over the course of the month, I'm going to make a ton of money in prop payouts and everything else. And then the cost of the puts was just the cost of the insurance, right? And so the idea is it's going to require me to keep longing the market every day to pay for the puts. If I happen to long the market every day, and somehow the market just crashes underneath me and it hits liquidity pocket and fails, and hits MHP and fails, and hits TD band and fails, and I happen to blow up every prop account I have, the total cost of that is barely $5,000. These prop accounts are dirt cheap. So that is my maximum loss on the long side. Then the 20K I put in will 10x, 200K. So I made 200K, the cost of 20K input, right? Minus 20 plus 200 minus 5. I blew up all my prop accounts. I bought some insurance and I made a huge fat fucking payout. If I continue long the day, I can make anywhere from 10 to 20K in these prop accounts every day in a nice bull clean market, betting that if the VIX clobbers below contango midpoint, we're nice and clean and rallying from here, then I can just make money every day, and then only a couple of trading days pay for those puts. And I do this at market tops in turbulent markets around VIX contango midpoint. This is a part of my strategy on hedging. Every time VIX is at the standstill of this one particular spot here, this is where I look at that. The idea is I don't know what's going to happen here, right? That's kind of the turning point. And at this exact place, well, let me be covered in both instances, right? We bounce right here and the market does this. Well, you, me, and everyone else knows the market's going to be back to being sensitive. We're going to start having like days like this, days like that, and days like that. And then I'm covered. Perfectly covered, right? And the idea is if the market continues to rally, then I just make money every day. Because if it does rally and breaks through here, there is no news for the next month to kind of kick it the other way. If we're solidified into the rate cuts, there's no earnings, there's no news, there's no anything. And the market just continues to rally. And then I'm just longing every day and longing every day and longing every day. The reason this is working is because it's prop accounts. The hedge is so effective is because the downside risk on the long side of prop accounts is the cost of the accounts. I'm turning the $5,000 investment into $100,000 worth of payouts as long as I continue to push the prop accounts. So it's a pretty decent net long with little downside risk. If I was longing my real account, I would take a significant loss on capital if the market crashed, and the options would make up for it, but it wouldn't make up for it many times over. The cost of the prop accounts is much less than physical loss you'll take in an actual account trading with the same risk. Right? Do I give signals? No, I don't. I don't give any signals. I just teach you guys how to trade. So that's my thought. Any trades? Absolutely not, dude. No. This is, I'm waiting till the end of the day to buy puts. I would say that maybe where we're going here, we might close up close to 23.8. But yeah, making no guesses from here. This reminds me of that big day that we had on April the 10th. Remember that? This day? Whatever day that was. So tomorrow is probably a little bit of this. We all know that, right? Show me your bank account. Whip it out. Show me that P&L. Yeah, whip it out. Yeah. Give me that credit card. Oh, whip it out. So that's how I feel. So like, as we know, tomorrow could very easily be a day that just sort of like retraces at least some of that. And we'll see what happens. We got to do a giveaway in a little bit. No, I'm not waiting for shorts. No. Did I schedule my dental appointment because based on sitting on your hands today because of Fed Day? That would have been extra. That would have been extra cool if I was actually that smart to think about that. I actually didn't. think about that. But you just challenged me to even be smarter about when I schedule my appointments. I just learned something today. I should be even more clever when it comes to scheduling dental appointments. Let me just go on Fed days and stuff, or days I don't want to trade. But unfortunately, those are days I got to stream because that's where I get the most views. But that's really smart of you. Now it's the only day they had available. So we trade on Saturday. No, we don't trade on Saturday. Guys, when I say tomorrow, I always mean the next trading day. Tomorrow always means the trading tomorrow, Monday, whatever day it is. I always mean, when I mean tomorrow, I mean Monday. Pretend that traders don't believe it, don't think there's a weekend. Friday, tomorrow is Monday. Trading's tomorrow, the next trading day. Yeah, nobody's trading tomorrow. Hopefully nobody's trading tomorrow. Yo, welcome Michael. Michael joined Cadet Squad. What's up, dude? Appreciate that support of the channel there. I'm paying for the dentist's new boat with all these payments. I know, right? Actually, I'm paying for my two brand new tires that just popped. All right. Well, sexy, boring day, but also sexy day. Hey, what's up? Howdy. You want your bear back? Not bearish market. Steal it again when necessary. About to eat my breakfast. Stop. I'm being summoned. Me that bank account. Whip it out. Oh, we got to do ETF. All right, cool. So we're going to do some direct-to-funded ETF accounts. Let me show you guys this one. All right. Hold on, let me get ready for this. We do this every Friday. Show you guys the program here. Direct to funded is a pretty cool program. Any straight to funded is pretty cool. It's a whole different style. Tradeify has one. I do that. ETF has one. And direct to funded is a program that you skip the eval. That's really kind of the whole thing, is that you're immediately funded from day one. And then you have two different kinds of accounts. Swing trading is allowed. End of the day drawdown. You have up to 5 accounts per trader. You have two different kinds of 50K and a 25K. And the 50K, let's talk about the 25K first. You trade for 10 days and then you get a payout. 10 days, get a payout. 10 days, get a payout. 10 days, get a payout. Tradeify the same way. Most your straight to funded accounts are the same, and they're all going to be the same kind of setup. So it's a different structure, but skipping the eval, this is how they do these programs. So it's not uncommon to see this. The bigger account, you trade a little bit longer, but you get bigger, fatter payouts, 5,000 each. The maximum payout for a single account is 20K per account. After reaching the limit, you stop trading immediately. And then you go to, you can be considered for the live program. And then of course, after 30 days, you can get back into get to the thing and start over. Let me find one more thing about the live. Then you can go live with these guys. It's a smart growth plan. So if you do go live, at some point they can move you to live. There's a thing. After you've made a certain amount of profit in the account, if you have like 5 accounts, right? So accrued sim funded profits that exceed the max drawn under your top 3 sim funded accounts will be held in a sim bank. The sim bank is capital reserves to be used in future match deposits as you grow your live account. The idea is that the sim profits are used to keep you growing in the live plan. The idea is that a lot of traders out there are like, okay, I'm going to go ahead and just make sim profits, get payouts. And a lot of the prop firms are leaning towards, we want to help grow you in live. So if you make a certain amount, ETF will put the certain extra money in a sim bank to give you funded, give you more funding later as you need it. Now, the thing is that traders are like, oh man, I want my payouts now. No, you don't. You don't. You want somebody to keep investing in you as a trader. I think it's such a cool program. And there's people, it's a little complicated because it's different than normal, but it's pretty cool because the idea is you're going to fuck up when you go live. And the idea that you have a balance still sitting there is going to give you more opportunity to go live. You want to be live as a trader. You make more money being live or in your own account than you do with sim payouts, because sim payouts are taxed at the highest tax bracket, whereas you know, a real live account is taxed at 60/40 rule. So better taxes, right? You do want money now. That's hilarious. Well, what's going to happen is typically you're going to take the sim profits and just eventually whittle them all away anyways, continuing to recycle them into the sim farm program. But yeah. So the idea is that they give you a big chunky payout and then the rest of it is banked into your live account in case you fuck up. I think that's a cool program. It's like a rehab program. A lot of the ideas is that a lot of the prop firms have this sort of, you know, go to live as a carrot they dangle, and then you go to live and the live is so strict you get like, you know, a couple $1,000 and you get like basically nothing, and then it's so easy to blow it up and then you start over. And you know, it's really live is just like a, honestly, with a lot of the prop firms out there, the live program I think is just a way to skirt regulation. The idea is that the live, even the live program is there so that you fuck it up and start back over and go back to farming and sim. It's like, because the live account is just sometimes at some firms it's like a tiny little thing with really tight rules. You know what I mean? So it's cool to see firms starting to go, like some of the bigger firms are starting to go towards substantial live programs. Like My Funded has a good live program. ETFs is like, okay, we're going to keep investing in the trader to help you grow, sort of thing. Your money is yours, but we're going to choose how you spend it. And I was like, oh yeah, that's kind of cool, because the trader is just going to, you know, take that payout and just continue blowing it up. So we're all rehabs. Yeah. So I honestly like it. It's unique, but I like the clever approach to it. You know, I've talked to them about it a couple of times. And that there was one trader a couple of weeks ago that was like raising a stink online, like I got denied payouts, but they didn't read the live account rules. Like they didn't get denied anything. The money was put into the sim bank so they can go live, and they were kicked live. And the trader apologized for not reading the rules. And so just make sure you guys understand that, like, you know, the idea that Apex taught you, you can jump in and be in a sim account and make infinite money, and that's how life is really going to be, is a short-lived time in history. Prop firms are starting to stray away from that model, and you got to really read the rules of what all the prop firm structure is. You know, ideally in the next couple of years, most of them are going to be investing in more substantial and competitive live programs and get you to live. So with ETF's program, it's very cool. Like I'm live with ETF. I like it. It's cool. I dig it. Anyways, very good. You know, they're friends of ours, and they're really nice peeps, and they definitely stick to their rules, and their rules are unique. That's the difference between them and a lot of the other firms. They have a unique take on a lot of the stuff. But unique sometimes just means ahead of the curve. So we'll see how this... First, trading with Karthik. All these accounts with trading theme usernames are so suspicious. Hey, I feel like a lot of people make their own trading identity for trading, though. Stunter FF, winner number 2. I'm giving away 4 today. 4. An ETF has a really good static. If you guys are really struggling out there when it comes to passing prop accounts, static is the easiest of all the accounts you can do. Sometimes they're very expensive, but ETF is having like a huge sale on their statics right now. We usually get, well, it varies, but like right now, I think they're doing this this program where all accounts are 80% off. The static is a really good program where you don't have any trailing drawdown at all. You get a big fat buffer out the door, and then that's it. That's your blow up point, which is kind of neat. Yeah, the static is only 89 bucks right now. So like is it somebody said they're loading up. Yeah, Tradeify is 40% just now. Yeah, it is. So statics are a cool program. If you guys will, you know, trailing drawdown is a drawdown that trails with your gains, right? And end of the day drawdown is it's a drawdown that moves once a day with you until you build a buffer, and then it stays put forever. A static is a buffer out the door no matter what. It's the same drawdown, and they're usually more expensive. So statics become favorable if you guys are trying to like be smart about playing the prop game. Rich Trader, baby. My code isn't giving 40% for Tradeify. What's it giving? Is it still 30? Sometimes they have a flash sale just for their code, and then not everybody. If they do like that, then only their code gives it. All right, one more. ETF also has pass one, get one free. Yep. Yeah, I do get credit if you use my link. So if you go in the Discord and click my link and use their code, it does give us the credit. If that's what you guys are doing, we would really appreciate that. That'd be kind of cool. Julian winner number 4. You guys are now funded traders with that ETF. Very cool. Y'all let me know how y'all like that program. Good job. The 4 of you guys. Trading with Karthik. I'm gonna write this down, Karthik. Stunter FF. I am Rich Trader and Julian. Julian win. All right, you guys. So the way you claim your prize, you have 1 hour or else you forfeit. You need to go to my Discord within the hour. You need to go to the contest channel. Discord link is in the description of the video. Go to the contest channel. Giveaways over, guys. For now. Go to the contest channel. Message an admin. His name is Slacks. He will get you hooked up with your accounts. Take a screenshot of your YouTube ID. Open up your YouTube from inside your account. Screenshot that so we know that that's really you. And then you're going to message him and let him know you won. You need to go make an account with ETF already. He's going to give you a link to click that link, and then, you know, type in the code he gives you and then get your account. Can you swing? Yeah, they said you can swing trade with the DTF. It's in the rules. We do giveaways all the time. Every single day we give away tons and tons of accounts. On the last day of the month, we do giveaway Bonanza, which is where we give away everything we have left over for the month, which can be like dozens of accounts in a single day. What do you mean? What is the next bounty for the giveaway? I don't understand what you guys mean by the word bounty. I hear that all the time. Is this like they say that in My Funded Future? What am I missing on that? What does that word mean? In the context of giveaways, like the next amount, the next target. Oh, okay. So the next target would be if we had 1,000 views, we give away a Tradeify straight to fund. And now today, we'll be doing, we didn't get to our final target today. We only got to like 950, but we're close. Keep helping us grow the stream. We get to 1,000 viewers. We will definitely do giveaways of even bigger magnitude. And the more you guys use the code, the more we go negotiate with our partners for more accounts to give away. Last month, we gave away about 100 and something. This month, we're giving away 200. Every month, we renegotiate with our partners and they give us more because we get bigger. So the more you guys use our code, the bigger we get, the more we tell our partners, you're going to give us more accounts or we'll stop mentioning your name on the stream. And they go, yeah, we'll give you more. So they're all pretty excited to work with our group because our group is so big. And we've been able to negotiate our way up to 200 plus accounts to give away every month. And I promise you guys, if we get to 1,000 viewers, I'll go buy you guys a Tradeify straight to funded account every single time, which is, you know, $300 or $400, I think, of cost. So I'll invest personally into buying you guys an extra account just to give away for fun. Give you guys a funded account every day. We get to like 1,000 viewers. And then in the afternoon, if we get to 700 viewers. So the goal is if the streams get bigger, we'll give back a little bit more. But every day we give away FundedNext accounts. Every day we give away something different on top of that. And Bounty Yanya is the one that tells you when the next bounty is. Clearly. You like how calm I am when I trade? I'm much more calmer when I'm not actually trading too, right? Why do why do they say bouncy? Bouncy like bounty yeah, because I hear that on what size DTF? I think it's 50K actually. Yeah, you guys get the bigger ones. So congratulations on that. There's like the more that I look, literally, Mike, this is hilarious, dude. I like the saga that's developed with slightly fatter Matt. So this is me at a karate tournament, Cobra Kai Matt, chopping red candles down with Pickle. Pickle is my sensei, and then the crowd is full of like the green Matt guys. No, I'm not. I'm sat out today for Jacksonville. I didn't do anything. What's the activation fee at ETF? I think was like 80 bucks. So a lot of times the firms typically have two models. Like you'll have a firm that has like a high price, right? And no activation fee. Then you'll have firms that have like 80% off sales with an activation fee, right? That makes the price the normal price. So in the model of ETF, they're the ones that do, 80% off sales where you get the account for dirt cheap. And then if you pass, then you pay the fee and then it becomes quote unquote full price. But even so, their 80% off plus activation fee is still less than somebody's full price with no activation fee. So in the prop space, you always have to do the total, your all-in cost. And when they have 80% off sales, the all-in cost is very low. When they don't have a sale, the cost is too high for static. Play the Pickle first song. All right. All right, breakfast time. Hold on. I got avocado toast.
Matt fires up the rocket scooter, run his way to get some cooter. Taking trades while you getting nades. You on stream looking like you flunked 4th grade. Your other trader's strategy is sniffing paint. Man, your trades whack and they stink. Turn on your stream and got a whiff of taint. Edge pressure, I wait for the trades to come to me. Or more like edge pressure. I go hard at half gap. I go harder at LP. Might bet the house if price is DD. You other traders PP. I would spark a blunt, but I got high BP. Watch this, I call this the Arby's trade. Might fuck around and make 10K. What's that? Oh, Pickle and I doc here to stay. Pet Pickle, oh yeah, Pickle first, so soft. You other traders, soft. You other traders trade soft. Here's a blue chew. Hope the market flushes you, cause you do. Boot camp coming up soon, better be ready. Speaking of coming, doc's back, sup doc, no Bugs Bunny. You make my tummy feel funny. All the lunch and green juice a man could ever need makes me real strong, Matty Hercules.
It was so good. We went to some Michelin star restaurant yesterday. Houston finally has been inducted into the Michelin star like guide, Michelin guide. Like 6 restaurants I think got 1 star. Tatemo. It takes like months to get a seat. The restaurant had like 6 tables in it. It was super incredibly let me think of what I want to. It was Mexican food from different regions of Mexico, but like not Tex-Mex Mexican food, like let me see if I can find some one of those places where, you know, like any Michigan restaurant, Michelin restaurant you go to. It's gonna have like little bite plates that you go. Let me see if I can find pictures of it. How do I photos? No.
There's very limited photos.
Tiny little space. It was definitely worth it. Like look, a little tiny space, that's it. And this is like there's like 4 tables here and then there's a bar. And that was the dessert. We had that. But yeah, we had this too. Like a bunch of little plates. The whole dinner was like what, $250 a person, right? I think we kind of had something like that. Yeah, it's a sopa. Oh, we didn't have that one. Looks like they have truffle on something. We definitely had this. This is like a quesadilla with some kind of and corn fungus inside of it with caviar and some kind of thing.
Oh, and there was like a bug in there. In that.
Oh,
there, yeah.
Yeah, so they didn't have a bug. Ours had toasted flying ants. They were literally the size of like little black-eyed peas, but they were 2 crunchy ants. And iDoc ate them. I didn't eat it. Did you like it?
Yeah. Like roach.
Yeah. I don't even know what roaches taste like. I wasn't adventurous enough to eat the bugs, but
I think when you heard that had fungus.
No, the fungus is actually pretty good, but I didn't like. But this is, yeah, it was essentially like everything was corn, but
Restaurant was.
It was like
processed.
It was like 6 little bites of food, and it was actually not bad. Oh yeah, we had this. This was the dessert. Oh yeah. Yeah, so we sat at the bar. This was our view the whole time. But this place has 1 Michelin star. It's actually, for what it's worth, as an experience, it's a pretty kick-ass little date night. So we had fun with it. That was pretty nice. We went to, yeah, because we went to gonna go to this cooking class, and we showed up, and there was like a no show. The cooking class people didn't even show up a couple days ago. And then we saw that this restaurant had an opening because it was right across the street, and then somebody had canceled. We luckily got in on it. So was it spicy? Were the ants spicy or what?
No, it just tastes like with a little bit of a nutty flavor.
Is Joe Rogan the chef over there? LOL. Yeah, so when you say Michigan, you think of tires. So the Michelin Guide was a way for the Michelin tire company to get you to wear out your tires faster. They would make like a place for whenever you would like travel around the guide would tell you where you drive to go to really nice places. They figure if you drive more, you'll buy more tires. So the idea was to guide you around cool touristy places. And like 1 star was a restaurant that was worth, I think it was like worth visiting, and 2 star was worth a detour, and 3 star was like worth traveling to another country for. I think something like that. So that's why a tire company trying to get you to travel around, go visit more places. You know, I don't know why Exxon doesn't have a restaurant guide, get you to spend more money on gas. Yeah. So it was actually pretty dope. And I know if you go to, a lot of times when you go to Michelin restaurants, there's a, you'll go there. It's usually like you get 1 bite of food, you get like 15 of 1 little bite.
Halfway through, already full because there was just every dish. The theme, corn.
Yeah. The other restaurants in Houston that have Michelin star, Lucifer, and that I've been to a bunch of places. That place is pretty cool. If you guys have ever been there, it's like Indian sort of fusion. That's pretty dope. If you guys have not been in Lucifer, it's a cool experience. At least the going to the inside is cool. BCN, Taste and Tradition, Catalan. Yeah, hold on. Oops, I want to show them the inside of Lucifer. So Houston never had Michelin star restaurants. I guess the Michelin people never came here. Lucifer is cool. You feel like you're walking into a palace when you go there. That's not even the coolest thing.
Maybe I should.
Yeah. Like this is what the inside of Lucifer looks like. It's crazy. Lucifer.
If like people in the Darb would why would I spend $100 free?
Yeah.
People are like, why would I spend free?
Yeah.
No matter how you
Like it's too gaudy or too expensive for comfort food or whatever.
Right.
That place is pretty cool. BCN Taste and Tradition was another one. We went there. And it's like, it's just a...
Oh, when he was playing the Sherlock, you mean?
It's a Spanish Catalan style tapas sort of place. It was alright.
Alright. After we walked out and we were like, "Hell, gave it a Michelin star."
It was pretty basic as far as like tapas goes, but it wasn't bad. Like I didn't, you know. Hey Matt, how you doing? I'm doing good. Thanks for asking. Appreciate that.
They're
Yeah. Yeah. Oh, and by the way, this restaurant we went to yesterday had 2 James Beard Awards back to back. Pretty darn good. Like the Chevron star food, yeah, basically. You know, why don't like Southwest Airlines have a guide? Definitely worth flying to. Looks like where you would meet Benedict Cumberbatch. Yeah, right. Like you would walk in there, and then of course, you know, you'd come out there with the Infinity Stone, or Sherlock, or that's what they're talking about. Oh, I thought they were saying that looks like where the Doctor Strange would be.
But also that too, right?
It looks like the Doctor Strange.
But more Sherlock is it, right? So good. Actually, my first.
Yeah.
Matt looks like.
Thank you. Favorite part of Michelin restaurants is that a lot of them will not take things out you don't like. Like they force you just to eat things you don't like.
Well, I mean, Matt. Eat the food.
Yeah. Usually when they're explaining the dish to you, you have to listen very carefully.
Yeah, I know.
There's like 40 ingredients, and I'm just listening, and he's like this, 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 and then I
missed the flying bug.
Yeah, I caught him say Mexican jumping ants. And I was like, I heard him say ants, and he had a thick accent, so it was really hard to understand. But I heard ants, and I was like, "Oh, are these ants?" He's like, "Ah, yes, like the jumping ants. They're a delicacy." And And then another, the steak that we had grasshopper powder on it.
Really?
Yeah.
Is that why you didn't eat it, actually?
No, I didn't eat it because it was
raw.
It was raw. I don't like my steaks to be raw.
And it's like super harder.
Yeah, so basically they had this Wagyu beef, but it wasn't tender. It was like chewy. It was raw. And I asked them to cook it a little more. But it was good because on top of it, there was a roasted grasshopper powder.
It was so good.
It was very umami flavored, according to him. It tasted like salt to me, but apparently it was roasted grasshoppers ground up to a powder.
I mean, I out Africa in Vietnam.
Protein. It's like roach or crickets are like a sustainable source of protein. That's like.
How is it?
I don't know. But there's like I've seen somebody selling or somebody talking about cricket powder online as a sustainable source of protein instead of cheese, which is where we get all of our protein powder from. You get it from whey. So like cricket protein is like the new, they're like it's more sustainable than the dairy industry for protein shakes for like fitness. I saw it online somewhere. You'll eat the cricket powder and you'll like it. I don't know if it's real or not. Like I said, I don't know. That was the pitch, that it's more sustainable. I don't know if that's just the sales pitch or what, but I remember seeing something on Instagram or something about it. In 50% consistency rule, top dog, is that no one trade can be more than 50% of your total haul. So you have to trade longer until you get it down. Example is you have a 10K profit target. 50% would be no single trade can be more than 5K. So if one trade actually goes over 5K and you accidentally make 6K, then your original profit target goes up to the amount that makes this 50%. So you'll have to actually trade a little bit longer if you break your consistency. It means you have to keep your wins small enough, or else you have to trade more extra days to go. Oh, see you later. Tarantula tastes like lobster. I don't know if I'd ever eat a spider, man. What I think is better, FundedNext's rapid account or ETF static account. It's hard to choose between the two of them because they're both so different. It comes down to, as far as the 80% off static is a really good deal. FundedNext Rapid's also a very good deal. They're both great. So you have to figure out which account you want. Rapid being a quicker payout, less expensive account, end of the day drawdown. Static is a fixed drawdown. It's hard to compare the two because they're both so different. Go to Chama Gaucha. Hey, Chama Gaucha's pretty good. Humans survived on bugs and plants for tens of thousands of years. This is why our teeth are flat. This is true. This is very true. There's no meat on a bug. Yeah, a bug is like shell and goop for the most part. That's the one thing I'm like, do I want to eat bugs? Every time I squash a bug, it's like goop. And I'm like, I don't know if I want to eat a bug. It doesn't sound appetizing. It's crunchy goop. The Men in Black flashback where he eats the roaches. Blech. Blech. The goop it's all protein, baby. Anyways, that was a pretty fun event. We were both kind of excited to do something different. She signed us up for some cooking class, man. It was like a chicken cooking class. And there was a whole no call, no show. We show up. And then we were like, what the heck? Bear Grylls 5-star bug goop. That's like a Michelin 4-star. They have to invent 4-star for that. Candle making class. Oh yeah, I think we get like there's all kind of stuff like that in town. We did some kind of like that bear that I have. That's like a bear painting class. It's like a ton of fun stuff. We get kind of bored doing the same thing, so we're always looking for like little art project-y sort of things to do. I'm not sure for the rest of the day there's much else we can do. I've still got about an hour to hang out till my funded show. But this little move here in traders pricing and rate cuts is pretty nice. It's been great to see this kind of big candle like this. My thoughts are, do we get a day like this tomorrow? This is where I'm worried about. Like a lot of times those big excursion days, the very next day, like do something stupid, like turn around and go the other way. So I'm just kind of getting ready to take a stab at the market, the downside with my puts, and then continue longing if it stays high. Lottery class like Ghost. Oh yeah. I've never done that before. Do the month fees drop off once you pass the eval? I'm not sure. I don't know the answer to that question. If anybody trades ETF, do the monthly fees go away once you pass the eval? Are you still funded? You still pay monthly when you're funded? What's up, Tyler? Hey, son. Did I catch those longs? No, I never traded the news, man. I sit out. I do nothing. I chilled. I watched the market. I watched the market dance around, and then I just sat out and did this. I ain't do nothing. I don't like trading during news. I like to be chill. Plus, I have to leave half day to get my dentist appointment, so I can't even commit to a trade. We're not just hanging out talking about eating bugs, man. You absolutely cooked today. There you go. Good deal. Now we're just talking about eating ants and roaches. You know, typical stuff. Typical Friday. So here, I think that, you know, towards the end of the day is when I'm going to start forecasting, or start planning on buying my options to hedge any downside move. I love seeing like big excursion green days in the middle of some selling pressure. That big pop is usually the day I start loading up on my puts. But like right at the end of the market day, like not even now, like minutes before we close. And I got puts and I long every day going forward. Long them with puts, baby. Long in the futures. Send on my insurance. Yeah, no trades. There's nothing to trade off of today. There's really no setups. Days like this, you know, sensitive news day, I mean, we just blasted through everything. We're outside DD band. There are no pivots. Long trades only. Off the band itself is a potential setup. I really got nothing to trade ever since the first blast up. You know, we've kind of just traded inside of a nice. Nasdaq has been up and down 20 or 30 points. There's really nothing tradable out of that. So whether you just gambled on a long and got lucky, or you just sort of like are scalping inside of here, to me, it's better just to kind of like let this day pass and go on. Be happy I didn't lose anything. Be happy I didn't care to trade. Which one's currently better? I would say they're both good, Shawn Michael. The Rapid's a quicker turnaround for payout. So I think that's good. But if you're struggling with end of the day drawdown accounts, static is the next step of making it easier to pass. Statics are a little bit easier to pass, especially in volatile environments. So you have to decide, what do you want? Do you want one that's quicker payout or one that's easier to pass? That's kind of the difference between the two of them. Till Trump. Oh yeah, Trump's gonna. Is Trump gonna make the counter move? LOL. I mean, how many people right now short of the market and they're sitting there bag holding a short right now? That's gotta feel really rough. But when it comes to the Jackson Hole kind of stuff, I thought today, I was ranking today to be, before we went into it, I thought it'd be closer to like a 3 out of 10. I didn't think Powell would say anything that we didn't already know, but Powell surprised me and said something that we didn't already know, was that the Fed doesn't care about the high inflation and they're willing to cut rates anyways to preserve the stock and labor markets. So that was a surprise, and Wall Street was surprised, and because that was a surprise, the market went up. Everybody's expecting him just to say the same stuff, like, yeah, we're probably not going to cut rates because, you know, tariffs and high inflation and blah blah blah. But he says the dual mandates and conflict, we have to save the labor market. Well, that was a surprise, and Wall Street loves surprises, so that was the big move. Other than that, my forecast was on a scale of 1 to 10 that this Jackson Hole was going to be a 3. Didn't think he was going to come out throwing a banger like that. But either case, I got that wrong. So the impact was actually much bigger than I thought it would be. But that's your effect of VIX being in a contango environment and a little sensitive to news, and that's what it is. But hey, you know what? Worst case scenario is I could have been trying to short this market. For all of our signs, we woke up, everything was bullish. I was just waiting for a dip to hedge pressure. I would have loved to grab 150, 175 along the NASDAQ. Never even got there. Does Tradeify Advanced Funded have consistency rules? I believe so. Yeah, I think it's 40%. Our statics are always easier to pass than any drawdown accounts. Yeah. Is my Tradeivate working? It should be. Yeah, it's working. You owe me $3. I'm just kidding. Damn it, I made one trade today. I lost $5.40. That doesn't count. My P&L is minus $5.40 now. It was zero. It was zero. It was zero. This doesn't count. This doesn't count as ready. I didn't do anything today. Trump's going to be talking a little bit, right? You want to, set up the tour completion of the video requested. So we're making a website tour for the platform. Essentially, whenever you sign up for the platform, your first instance in the platform will have like pop-ups that walk you through all the pieces and how to sign up for stuff. All right, the users manage. Your girlfriend drops your P&L every weekend, about $1,000. Dang it. Somebody said get a new girlfriend. That's funny. We're in like charting analysis territory. Yeah, for the most part, right? Oh, yeah. So market moving on a giant coin flip catalyst. Crazy stuff. But at the end of the day, this is really good. It would have been fun to trade without Jackson Hole. Dip to buy, liquidity pockets to jump in on. This to there, this to there. These are pretty good setups. So even LPs today were really strong. But you didn't get a chance to trade them just because the market moved through them. Then here to there. These are the EST trades we had yesterday, right? Liquidity pocket there to there, liquidity pocket there to there. If we break through here to there. So it was a pretty solid, you know, all the plays were there. It's just it moved too quick to actually tap them. Greater bull market was there. Everything was pretty solid. Now we're outside DD band. So small trades only, longs only. Off of strong pivots. There just aren't any strong pivots up here. We moved too far out of bounds today. All of our stuff is like way down here. Market just goes boom. So unless you were smart enough or lucky enough to jump in, it just like fuck it, I'll just long the liquidity pocket. Man, that would have been a great reward for you. Is this the third touch on the trend line? Yeah, right. This was crazy. I don't even know if, to be honest, I don't even know if I want to buy puts today. Usually a day like this might actually have to round off. I might wait till next week to even think about it. I think today it just moved too quick. Like maybe green day, green day, green day, and then maybe like get a week extra of theta and then buy it. Or maybe actually what I'll do is I'll split up. I'll put in 10K today and then 10K a week from today. Just in case it goes higher. And then now I can buy dips the whole way down in case it's still choppy. And then I'll probably abandon everything and fix reclaims key levels here. Fixes down below here, then there's no reason to bet on further volatility or be hedged. So maybe I won't do that. Here's the rug pull. You think? You draw a red impact line on move? Yes, sir. That's correct. Have my tool ready just to do that very thing. And that's going to be at the band, so. Yeah, problem. Hey, don't fight the Fed. That's like kind of like one of the biggest things. What do you guys think? Are we flying as a flush today? What do y'all think? Maddie P, what's up, dude? All right, you guys. How we finishing up today? What do y'all think? I hate that it's very little momentum and it's very hard to trade on this. So, market dead from here? What do y'all think? This candle is suspiciously high. Like the ES breaking all-time highs again is really like alarmingly high. Nasdaq is still looking a little booty today. How many songs submitted in total? Like hundreds, man. And I have to leave, so no afternoon stream today. And after my funded TV, I'm gonna have to bounce out of here really quick. I actually have to leave early. Slightly untalkative Matt, just preparing for making some options trades later. That's it. I'm doing some research on catching up on some work. That's helpful. Option trading strategy? Yeah, I'll spend a lot of time at the end of the boot camp sort of going over some options trading hedging strategies that I use. Yeah. And how I use monthly maps to like pick setups. Boy, it's kind of confusing watching this where we end up. What if today's the day we end up down here? And I don't get my put trade by the end of the day. I was just shopping around a little bit ago on my phone trying to see the prices of some of the options now. I'm looking at some of the theta decay just to do some calculations how much I was going to take in loss per day if I got in a week too early. Just kind of counting how much. One day trading cycle. What do you mean by that, Jay Snyder? Oh, the pump song? I didn't play any of the songs today. Today's just been kind of a chill Friday. Man, it's been a lot of songs since yesterday. Let's play some of them. Do I think you should buy right now? Oh, I can't tell you what to do, man.
Rejection, Another trade, just another resurrection. Back in the black, a monkey on my back. Just to learn this, I give the clothes off my back. Stop, I can't make it, I'll make it. Wait, I think I found a way out. Stay, if I do, I'll make it. Pray, I found a way out. Rocket scooter flies high, it owns these streets. You found the right place, gonna land on your feet. No more time is gonna pass you by. Time to ride, time to ride. Rocket scooter flies high, you feel knocked down, in too deep. You found the right place, gonna land on your feet. No more time is gonna pass you by. Time to ride, rocket scooter flies high. In the end, hedge precious support. Put the ball back in my court. Bearing bulls on honey. Put me deep in the money. Put me deep in the money. Stop. ESD, I will never chase. Wait.
We can flush afternoon would be kind of nice. Although I'd like for it to close at the high so I can actually get some put trades in here. Got 30 minutes until my funded TV, you guys. It's been great hanging out with y'all all afternoon. I have a good time every single day in the stream. Y'all really make life fun. I really enjoy chilling with y'all. Tough day today, I'm sure, for some people. Kind of got lucky, though. Not really lucky, but sitting out and missing out on some craziness. I consider that. I think that's a skillful choice, to be honest. I wouldn't call it luck. I usually like to just kind of stay on the sidelines when it comes to that nonsense. News events. And I thought Jackson Hole, I didn't think it was going to be like a 10 out of 10 as far as severity. I assumed Powell was going to spin the same narrative. He came out and surprised me, which is crazy. You guys think we're going to flush out from here? What are y'all thinking? That feels like it, right? Looks like it wants to. That was a good song, by the way. Wait, you're right. Someone blocked your comment. Wait, what happened? Fire. What was your comment? Mag 7 dump with Russell Strong. Yeah, it could be. But next giveaway. We have to do one to this. Oh shoot, we don't have an afternoon stream, do we? To my loyal followers that stay until the end, let me do some rapid accounts because I love you guys. Good call. See, this is what happens when you stay until the end. Sure, why not? We're not gonna have an afternoon stream, so. FundedNext, let's do it. I'll do some 25k rapids, 2 of them. Type in FundedNext, friends. Type. The song is pretty dope. I dig it. That's a good song, Jeremy. I like that one. That's a cool one. It's got a good hook to it. I dig it, man. Somebody said, you are bad. All people are bad. Wait, what? Who's bad? Are you quoting the song or something? All right, guys, get ready to spin the wheel here. I mean, nobody's perfect if that if that's what you mean. Oh, that's funny. Funny comment. Wicked. Jake Steele, 3188, winner number 1. Jake Steele typed something in chat. I like the Risk Interval song. It's very catchy. Dang, man, there's so many good songs this time. I'll be sad if I don't get the highs for today to buy puts on the top. $77 PC7. All right, you guys, y'all know the drill. You got about an hour to head over to the Discord and talk to our admin Slacks in the contest channel. To get ahead of what he's going to ask you to do, you got to take a screenshot of your YouTube ID. Let him know you won the FundedNext account. You got to make an account with FundedNext as well. It's a great firm. The rapid accounts are really nice. It's 1 day to pass, 3 days to pay out, 40% consistency, and you get tiered payouts pretty quickly as long as you survive in the account. This could be a big old flush day today. Deal. We flushing today, guys? Looks like it. The market's trying to. That was a good song. Hopefully this is the dip that keeps us going higher. And we'll see. My ideal would have this stay close towards the highs, but I don't know. This does feel like it's gonna flush out. I'm not gonna lie, guys. I might be down here by the end of the day. Any scoop for any 90% promos? Right now, ETF is 80% off, and I think that's it for the big promos that we have with our partners. Let me double check. They have a pass one, get one, and 80% off at ETF. 30% off Tradeify. You get 40% off at Tradeify now if you use our link, but you have to use the 1-year code. And that'll give you, use our link to give us the credit. You just asked us 70% off flash sale just for another day, for today only. TBT is 40% off still. That's it from our partners. Can I get FundedNext to give you guys a huge discount again? Yeah, 70% off this futures desk on their static accounts, but at 80% off on ETF static accounts today. Basically it. That's a pretty dope song. All right, futures 420. All right, guys, we got about 5 minutes to get ready for my funded TV. You guys the link over here. It's about to shoot up. Maybe. Let's start preparing to head over there. I'm gonna go to the restroom real quick. I'll be right back.
In the chat room, traders going wild. Success rates that left the crowd beguiled. But wait, there's more to celebrate tonight. Futures traders 420 got it right. 7 setups, 7 perfect wins. That's how a boot camp legend always grins. Following the signals, trusting in the code. Perfect execution down the trading road. We proved it live, we proved it true. Rocket scooter pulls the winners through. 7 for 7, futures traders 420s on fire. A plus performance taking profits higher. Live stream magic skills on display. This is how the pros trade every day. They said it couldn't be done, they said we'd fail. But the live stream numbers tell.
Guys, we'll see you over at my funded TV. We've got to get out of here in just a little bit. Thanks for tuning in, y'all. We'll see y'all Monday morning. After the My Funded TV, I got to run out of here and I'm going to be out for the day. No afternoon stream today. Head on over here, guys. Let me see on a little bit. I've never, Yassine, I've never used Funded Futures Network before. I'm not sure.